Checking network. Let's see if we get this party. It's not specific. Okay, that works. Oh, blah, wrong, again. Here we go. Here we go. Okay, all looks good. Let's change this. Do one of those thingies, do one of those thingies, do one of these thingies. Michael Sinclair, Doc, how's it going? Doc, you check out the numbers for this week? Looks pretty good, pretty good, pretty good. Who do we got here? Running Amok, Adam, Jake Graz, Ozzy Bro, Chanum, Hammer Sophia, Bro Stevens. All right, let's get started. Let's get ready to roll. What do we got here? Let's move this thing just a smidge. Right there. Not quite. Right there. Okay, I need something to stick back there. On Black Aaron A. User 6025. Okay, whatever. Grow it 10. Grow it 10. What is that all about? Ooh. Okay, that looks better. Looks better. Looks better. Looks better. What's happening over here on Instagram? Looks like they're frozen. All right, we're getting ready to start. It is a Friday evening. What are you guys doing here watching me? Okay, grow it 10. I'm not quite sure. I don't want to even touch that one. Exxon. Kivo Gemma wants to take a look at Exxon Mobile. XOM. Exxon Mobile. Let's change this. Go here. XOM. Exxon Mobile. Tra-la-la. Here we go. Here we go. Here we go. Here we go. Yo. Here we go. Yo. Okay. First and foremost, it is Friday evening. It is the last day of week number 40, which means we got 16 weeks to go to the end of the year. Is that right? No, wait a minute. Wait. What the hell week is it? I actually have to count. This is sad. Adam Devine, how are you? Damn it, I haven't done a damn thing today. Okay, so I have no idea what week this is. This is week number 3. This is the end of week number 3 for the fourth quarter. So week number 4 is next week. Look at that. We have 2 weeks left. 2 weeks left of the first month of the third quarter. Check out 165 for Pepsi. All right, Pepsi. You have to remind me of that one. P-E-P, Pepsi. Okay. We're looking at Exxon Mobile at the moment. Kohl's. Somebody wants to take a look at Kohl's. Kohl's, Pepsi, XOM. Let's keep on rolling. All right, thank you. Kivo Gemma. Okay, first and foremost, we're going to take a look at Exxon Mobile. Exxon Mobil's been around for over 100 years. First thing I always want to look at is, I got to move that. No, that's about right. No, it's not. There we go. Exxon Mobil. Here's the high, here's the low, here's where it was, here's where it is. Look at the action. Down, up, down, sideways, up, and then down again. Okay, well, that's where we are. Having issues with Instagram. I don't know why Instagram wants to give me a hard time. I gotta shut it off, turn it back on, reboot, all that kind of stuff, blah, blah, blah. All right, we're currently at 120.01. Now, if you've been paying attention over the past couple of months, I give you this cool little hint. Check it out. If the last trade, 120.01, the bid 119.81, the ask 119.99. Both of these are lower than the last traded price. That usually means the market maker is going to push it down a little bit. Okay, when he pushes it down a little bit, well, she is coming to the downside. We're going to take a look. But the 120s are going for 120, right around 1%. Okay, if you like Exxon Mobil. And that's always the big question. A year ago, we're at 112. We bottomed out for the year on the middle of January at 95.70. Shoots up, goes sideways. Look at the last 30 days. Last 30 days, okay, last 30 days, we're at 113. They bottomed out at 111, shot up to 126. That's a $15 increase. That's more than 11% from the bottom to the top. Well, profit taking up, gaps down, and then slowly dropping. It looks like the profit taking is going very slowly on this one, but it's still there, none the same. Now, what does Exxon Mobile usually do this time of year? For those of you that are new, we're going to take a look at what's called a seasonality chart. Now, a seasonality chart, if you didn't know already, it is one whole year. All the way to the left is January 1st, all the way to the right is December 31st. It basically tells us how does the stock react year after year after year. Well, the blue line represents this year, okay? Down, up, sideways, back up. Basically the same thing we just saw a little while ago. But here's what we really want to see. This red line right here. This is 10 years worth of data. 2014, 15, 16, 17, 10 years average movement for the year. So what can we expect this thing to do for the rest of the year? Well, we're right here, okay, in the middle of October. So let's highlight, okay, put your cursor here, click left, drag right. A very slight upward tilt. See that? You can barely see it, just upward tilt. Now, for those of you guys that are new here and don't know yet, the chart you're seeing here, this screen here, this chart here is live on YouTube. Up in my bio over there, the10minutetrader.com will bring you to the link to the 10-minute trader at YouTube. All right, so if you really want to see these small, tiny numbers, you really can't see them on your phone or your iPad or your tablet or whatever you're watching it on. But it is live on YouTube, so if you have the ability, you can watch it on your big screen TV. Okay. Let's keep rolling. So I actually like Exxon Mobil. I don't have any at the moment, but that being said, next one on the list is going to be Kohl. Somebody want to take a look at Kohl's today. Kohl's is up today. Cool. Now I'm into Kohl's at 23.23. But first thing I want to see is here's the high, here's the low, here's where it was, here's where it is, goes up, down, now she's going sideways. Okay, I don't like saying sideways because stocks don't go sideways. They go up and they go down. That's about all they do. Thanks, that was great. Kivo, I'm glad you liked it. All right, so currently we're sitting at 20.78. Here's another one, look at this. 20.80 is the last traded price. 20.71 is the bid. 20.78 is the ask. They're both lower than the last traded price. So the market maker is going to be pushing this one down also. Dennis Mancini. How are you doing there, Mr. Dennis Mancini? So if we're looking at it that way, well, the 20.78, we'd be looking at the 21. That's going for 45 cents. 45 cents is 2%. Now, for those you who don't know, I'm looking for a simple, safe, predictable, consistent 1% per week. And that I get with covered calls on dividend stocks just before they pay the dividend. Because I have found over my years of trading that stocks have a tendency to go up in value before the dividend is paid. So if you get yourself a dividend calendar, okay, that's December. We don't look at December. We want to go to October. All right, so here we are, October. These are the companies that are having a dividend this month. Now, the little green dots you see, Procter & Gamble, General Dynamics, Verizon, AT&T, General Mills, MasterCard, Lennar, is that Bank Mellon? I think it is. American Express, Bristol Myers Squibb, JP Morgan, a whole bunch of others. Now, I look at about 300 stocks every week. Reason being is because there's only about 300 companies that have consistently increased their dividends for more than 2 decades and have weekly options. And the reason why I'm looking for weekly options and increased dividends is because, number one, I don't want to put my money into a company that's not profitable. So if they're profitable and consistently profitable, well, they increase their dividends. And I don't do stocks for capital appreciation. I'm not looking for capital appreciation. I hate it. It bothers the hell out of me when somebody says, well, if you put your $10,000 in this company 20 years ago, you'd be rich now. Well, who the hell has $20,000 or $30,000 they can just set aside for 15, 20 years? Sorry, for the average person, that doesn't work out. Because how many companies have the opportunity to be able to go from nothing to something 20 years later? Well, there's a whole shitload of them. As a matter of fact, there's 9,714 of them the last time I checked, which was Monday. That's a lot of money to set aside. You know, $10,000 here, $10,000 there, $10,000. I hate it when they say that because the average person can't do it. I can't take $10,000 and set it aside with the hopes that the company's going to quadruple in 10 years. Hell no. I need cash flow. So the trading strategy here is specifically for cash flow. If you're looking for capital appreciation, if you're looking for something long term, this ain't it. This is not long-term play strategy. This is simple, safe, predictable, consistent, looking for a 1% per week. And that's all I'm looking for. All right. Fiona the Pity. Marie, you're here. Yay, Marie's here. All right, some contents on the live are going to be filtered to protect the community's experience. Frederick, what do you think about 3M? I love 3M. Hi, Marie. So let's take a look at 3M. Who wants to look at 3M? Who is that? Somebody asked something about 3M. Who is that? Eric. Eric Frederick wants to take a look at 3M. Now, I love 3M. They've been around for over 100 years. Unfortunately, listen to this. They've been around for 100 years, okay? They have increased their dividends to their shareholders for 62 consecutive years. Not weeks, not months. I'm talking 62 consecutive years. That's 6 decades. What's your strategy? Buying on the EX dividend date? Nope, not at all. Grover Burger. Okay, Grover Burger, just sit tight, relax, and we'll get to it, okay? It's really not that difficult. It was a trading strategy I created for my 9-year-old daughter back in 2008 when she jumped on my lap and said, Daddy, Daddy, what are you doing? Can you teach me? So, the strategy I had to come up with, here's the challenge. It had to be simple. It had to be safe, predictable, consistent, and no way for her to lose. So, 5 rules. You can see a lot of 5s. 5 rules. Number 1, never buy something you don't understand. Never sell at a loss. Make sure the company's consistently profitable. Make sure the company has weekly options. I want a weekly cash flow. And number 5, make sure the numbers work. What do I mean by the numbers? What am I buying it for? What can I sell it to someone else for on a covered call? What premium is that? Is that more than 1%? Great. That's the numbers. Well, what does the charts tell me? Well, here's the high, here's the low, here's where it was, here's where it is. The direction is basically going to the upside. Great. I love 3M. All right, let's take a look. Now, unfortunately, 3M is going to be a no because it's a little too close to the 30-day high. Look what she did. She went up, pulled back, went up, pulled back. So she's coming down at the moment. 3M might be a good contender in about a week or 2. So I'm going to write 3M 2 weeks from today. And we will look at 3M in 2 weeks. And hopefully it's something we can jump into. So that's going to be a no. Kohl's is next. KSS. We were just looking at Kohl's, weren't we? We were looking at Kohl's and we got interrupted. Sorry, it happens. Squirrel. All right, here's the high, here's the low, here's where it was, here's where it is. She went up, down, and now she's going back up again. 21.78. The 20.78. The closest strike price is 21. That's 45 cents. That's over 2%. If you like Kohl's, that's a big question. You got a lot of questions you got to ask yourself. Question number 1, does it make sense? Question number 2, can I do it? Question number 3, do I like this stock? Question number 4, do I understand the pros, the cons, and the risks involved? Okay? Those all good questions. All good, valid questions. Now, I've been here every single night except for 5 this year, okay? 1, I had to take someone to the emergency room, okay? So I was there all night long. 2, I was sick as a dog. The last 3, the hurricane. Hurricane took away the electric, the water, the cable, and the phone. So I was 3 days, like that, 3 days. 3 days without all that stuff. So that's the only reason I wasn't here for those 5 days. Other than that, I've been here every single night since the beginning of January. Okay, so let's take a closer look at Kohl's. A year ago, Kohl's was at 20.91. Topped off the year at 29.63. That was back at the beginning of April, but since then, she just dropped. Look at this. Dropped, retraced, dropped, sideways, and now she's jumping up. Okay, great. Let's jump in and take a look at the last 30 days. Now, why do I like the last 30 days? Because the last 30 days gives me a good idea where it's going next. Well, look at this. 30 days ago, she dropped from the 30-day bottom, just below 18. She jumps up a week later, just around 21.25, comes back down, shoots back up. We're sitting at 20.80 at the moment. Could she keep going? Yes, she could. Adam wants to take a look at NEP. Is that Nextera? NEP or Newmont? I forget. Because NEE, NUE, and NEP. All very close. And they're all energy stocks too, which is weird. All right. So, the 21's going for 45 cents. How do we do that? Well, let's do it quick. Do you have this Discord server? Yes, I do have a Discord server, but it's only for 24. Adam, what does 24 mean? Adam, I'm not quite sure what you mean when you write 24. Okay, let me see if I can go back to those questions. See if I can get an understanding, because he put 24. What the hell does 24 mean? 24. NEP 24. What does that mean, Adam? I'm clueless to that one. Anyway, let's get looking. The 24 strike for NEP. Oh, okay. I'll remember that. How can I join your Discord server? You actually have to go and I'm gonna check this out. To the 10-minute trader, which is my website, the 10-minute trader. Okay. Once you get to 10-minute trader, right there, live trading. You click on that, and that brings you to my Patreon. The Patreon, you get live trading, which every morning, Monday, Tuesday, Wednesday, Thursday, we do live trading at 9 a.m. until you guys are done asking questions. Okay, the longest I was on for 3 hours. 3 hours answering questions. So it was cool. A lot of good questions, too. On Friday, we jump on at 3 o'clock just to make sure the options that we sold. Now, we're option sellers because 80% of all options expire worthless. So why would I want to buy if it's only a 20% chance of winning? So we look at the 80% chances because I like to have the odds and probabilities stacked in my favor. I like to buy at the right time when I know the stock is going to move and everything looks good because I'm looking for a simple, safe, predictable, consistent 1% per week. Now, if you don't know your math very well, that's a little over 50% per year. All right, that being said, let's get back to where we were. So let's actually do a trade real quick for those of you guys who haven't seen it before. Now, we already agreed that currently at 20.78, the 21 is going to be the best deal. All right? So let's see what a covered call would look like on the 21s. Now, first and foremost, we don't want to buy a stock unless we know that the timing is right. The timing we look at by judging where the chart is what the chart is telling us. So 30 days ago, we were here. She dropped down. There's the 30-day bottom. Well, what happens at a 30-day bottom? You get accumulation. You get people starting to buy. Albert, how you doing? So people start buying at the 30-day bottom. And then she shoots up. And she increases to a point where investors like me and some of you guys say, wait a minute, that's a nice profit. I'm out. Profit taking starts and the thing comes down. Comes down to a point where I say, okay, let's jump in again. I jump in, I jump out. I'm not monogamous to any stock at all. It doesn't make any sense to me. Because if you take a look at the charts, and charts don't lie, they're basically numbers. Okay, a year ago, we were at 22. Well, right now, we're at 21, well, $20.80. What was the advantage of buying this thing and holding it for a whole year? Okay, you got 4 dividends. Fine. But 4 dividends, it pays a dividend once every 90 days. So if you buy it, collect the dividend, sell it for a profit, and then wait 90 days and do it again, I could buy it 4 times and still collect the same 4 dividends. But I can also, here, let's go to the calendar for a second. Okay, so any stock I want, I can buy it, collect the dividend, sell it, jump into another stock, collect its dividend, sell it, pick another stock, collect its dividend, all within a 90-day period. So most people take all that money and tie it up for the whole year. So we've seen what happened here for the whole year. Okay? A year ago, we're at 21. She went up, she went down, now she's basically at 21 again. What was the point other than the dividends? Now, this company has weekly options. So I can buy it, sell an option, and the options are usually higher than the dividend. So why even collect the dividend? Don't get me wrong, every once in a while I do collect dividends, because when I buy a stock, it doesn't always go up. I mean, just because that's what I want, does it always happen that way? No. As a matter of fact, the longest I've ever held anything was 9 months. I bought, it was Kimberly Clark. I bought it, she dropped, it took 9 months for it to recover before I could sell it at a loss. But what happened in those 9 months? Did I just buy it and sell it at the same price? No, I collected a premium every single week. So that's why I like weekly options. If I'm buying it at the current price, $20.78, I sell the 21s, I collect 45 cents. Now 45 cents is 2%, and that's for 1 week. So if the stock is going to the upside, great. I don't want to buy it at the high, which it's not at the moment. It still has room to move. So if I get the premium every single week, well, that's 52 times a year. And do I stick to just one stock? No, I just take a look at all the good ones. When I say the good ones, well, these are companies that have increased their dividends every single year for a minimum of 2 decades. Now, I'm here every single night, and you guys give me lists of stocks to take a look at. I'm old school, I write stuff down, sorry. Okay, but look at some of these lists that you guys have me take a look at. Okay? Oops. Here comes the good ones. Look at this. Look at all these stocks I take a look at every single night. Okay, you guys have me take a look at stocks, and that's all I do is just take a look at stocks, read the numbers, and give you my opinion. So I think as I'm watching what you guys are buying or what you're looking at, and I'm thinking to myself, what the hell are you thinking, putting your hard-earned money into some of the crap that you have me take a look at? Seriously. Some other stocks I look at and I'm scratching my head thinking, who in their right mind would invest in a company like this? Number one, they're not profitable. Number two, they're not sharing their profits. Now, I understand there's a lot of speculation out there. People say, hey, this is a good company, you should throw your money in it. Okay, it could go from 50 cents to 50 bucks. It actually could. But is it probable? You get to a certain point in life, which is where I'm at the moment, where you can't afford to take risks. The money that I have set aside is going to last me for the rest of my life. Okay, fine. I make 1% every week, and that 1% covers my bills at this moment in time. Now, granted, I don't spend all the money every week, but I do spend most of it. So my account does grow very minimal every week, but at the end of the year, I'm still up, which I'm fine with that because all my bills are being paid, and I end up at the end of the year with more than I started out with. Well, great, because when I get older, I'm assuming my health will fail and I'm going to have to start paying more money. I refuse to take medication, so I'm not worried about that. But that being said, let's get back on track, can we? Okay, what's your strategy? Grover Burger, my strategy, simply put, Buy a good quality dividend stock, sell a covered call against it, collect a premium, do it every single week. What did I miss? Oh, wow, I missed all this stuff. Okay, Reese Johnson wants to look at TVGN. Now, Reese, I can tell you no right now, or we can pull it up and I can tell you no then. So let's do it. TVGN. No. Couple of reasons. Reason number one, no options, no thank you. Reason number two, it's $1.72. I highly, highly doubt this company has 20 years of increased dividends. Okay, so yeah, no. So when I say I like companies to take a look at that are at least 20 years old and at least have 20 years of increased profits, why the hell? Now I understand you want to gamble, fine. It's $1.79. Why not buy a couple hundred shares? Who knows what's going to happen in 20, 30 years? Well, let me tell you something. I don't think I'm going to be around in 30 years. So why the hell would I invest in something like that? If you're younger and you're not retired, hey, I get it. Okay, I'm retired. I don't want to look at something like that. Seriously, it's just a waste of my time. Okay, let's see if we can get Instagram going again because we're having issues with that over there. All right, so that being said, let's look at something else. Business development companies. Benito Josiah Ramirez. ¿Qué pasa, amigo? Ooh, look at this. Dennis wants to take a look at Intel. Now, I like Intel, INTC. Now, as you'll see, when I say, ooh, I like that, you will notice more than likely it is going to be a name that you most likely recognize. Why the hell would I want to invest in something nobody's ever heard of? Well, think about it. Okay, I'm retired. I don't have that luxury. Okay, sometimes I wish I was younger. Sometimes I'm perfectly happy where I am. But I am kind of happy where I am because I get to hang out with my grandson. I don't know who the hell would have made me a grandfather, but apparently they did. That being said, let's see if we can get Instagram working. Checking connections. We'll see. Might get it going. You're now live. Yay! Over there in Instagram world. Yay! Okay, anyway, so let's keep on going. So, Intel. Great. First thing I always want to see is where's the high? Where's the low? Where was it a year ago? Where is it now? And what's the direction? Down, up, down, sideways, down, sideways. Okay, great. Now let's take a look at the numbers before we jump into that. Look at this. 39,971,000 shares traded today on Intel. Well, that's a crowded dance floor if I ever heard of one. Okay, 22.75. We'll be looking at the 23. The 23 is going for 40 cents. We all know that's well over 1%. So let's take a look at the numbers. The charts. 35.57 a year ago. We topped out in the end of December at 51.21. Then she drops, goes sideways, drops again, goes sideways, and now for the last 30 days, 30 days looks pretty nice. Check it out. 30 days ago, we're 21. We dropped all the way down to 20.25. Shoots up to 24.50. Down, up, down. Now we're going back up again. Perfect invitation. Now, I like it at 21 because 21.75, the closest strike price is going to be the 23. Okay? 22.75, the closest strike price is going to be 22.50 or 23. The 22.50 is going to be the safer trade. So let's do the 22.50 and I'll show you how we do it. Now, I like Thinkorswim because it has everything I'm looking for. But before we actually do the trade, let's take a look at the chart to make sure our timing is right. Because the numbers can look really nice, but if it's the wrong time to buy, no thank you. There's over 9,000 other companies to take a look at. So if it's a no, it's a no. But let's take a close look. Hey, wait a minute. We already did all that. Yeah, so we already did all that. Sorry. Don't get old. It sucks. You forget things. All right, anyway, I said I wanted to do the 22.50s. So we want to change it to covered stock. The 22.50s, here it is right here. Now, for those of you guys that are really interested, okay, you see how I go quickly through all the charts and all the different spaces on this platform. This platform is called Thinkorswim. It's free to download. However, it does belong to Charles Schwab. Now, Charles Schwab will let you use it for a month or so, but they would like you to move your money over and use their trading platform. Okay, so that being said, now I don't get any kickbacks. I don't get any what do you call it? No compensation whatsoever. I just like the trading platform because it has everything that I'm looking for. Okay, I always tell people, find what you want. What is your goal? What is your outcome? Why are you investing in the first place? Okay, if you want to have a good retirement, well, great. How much do you need on a monthly or annual basis? And then work the equation backwards. What do I mean by that? Find out what you have, because you know how much you have available. Everybody should know what they have available at this moment in time. You take that number. Now, if you're getting 1% a week, okay, so if it's 100 grand, 1% a week, that's 50,000 bucks. Okay, if it's a million, 1% a week, that's 500,000 bucks. Whatever it is, you have 20 grand, okay, 50% a year is 10,000 bucks. Okay, if you can live on that, great, more power to you. Then find a trading strategy that will get you where you want to go. Okay, you can always give it to a money manager and have them do it for you. I believe the current rate at the moment is a 4% draw. So if you have a $100,000 account, you're getting $4,000 a year to live off of. Hey, more power to you. You get $1 million, 4%, you're getting $40,000 to live off of. Okay, but I said, hell no, I would still be working if I didn't figure out this trading strategy. So at 50% per year, my little nest egg pays all my bills. All right, that being said, let's take a look. Now, I said I liked it at 21. Great, so that's what we're going to do. I'm going to change it to 100 shares, that way it doesn't scare people away. But I usually buy 1,000, 2,000 shares at a time. There's no difference, okay, whether I do one contract or whether I do 1,000 contracts. The rate of return is the same. So if you're starting out with $20,000 and I'm starting out with $200,000, I get 1%, you get 1%, it's still 1%, however you want to look at it. All right, so I like going to a market order. The reason why I like market orders is because they fill instantaneously, first thing in the morning. Okay, I'm not sitting around waiting and wondering. Okay, and also when you're doing two trades at once, which is what this is, because I'm buying the stock and selling the option at the exact same time, the two are linked together. So when I say I want safe, simple, and predictable, well, before I even do the trade, it's telling me how much I'm going to make. $41 per contract. Now, I know that doesn't sound like a lot, but hear me out. Okay, so we're going to bring the calculator out. So the profit is going to be $41.50 per contract. Well, what is every contract costing me? Well, the contract is costing me $2,200. $2,209 to be exact. So what is the rate of return? Well, the rate of return is 1.87. That's just shy of 2%. Now, do you understand what 2% a week actually is? Well, to figure that out, there's 52 weeks in a year. Okay? That is a 97.69%. That's almost 100% rate of return if you do it every single week. Now, there's a couple of questions, and these are the ones you should always ask yourself. Number one, does it make sense? Number two, is it something that I can picture myself doing? Number three, is there help available if I need it? Okay? Number four, can somebody walk me through it? Number five, I already said doesn't make sense. It does. Anyway, do I like this company? That's a good question. So if you don't like the company, don't do it. It is that simple, that easy. Never buy something you don't understand. Twine, how long are you going to be teaching live here? Talking months, years. Okay, Twine, interesting question. hold tight for 1 second. Let me show you something. Okay, this is my website, the 10-Minute Trader. Go here to view all. That first thing you're going to do is you're going to see all of my social media. YouTube, Twitter, Facebook, Instagram, all that kind of nice neat stuff. Let's go over to YouTube for a second because Twine has a question here. Okay, Twine, you come over here to the 10-Minute Trader on YouTube, and you go over to videos, and you go to the oldest video I have, and you will see.
Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't let me calling it that, but I do.
Okay, that's me right there. Okay, look at all that hair, and there's no gray. What I'm trying to point out is this video was recorded 12 years ago. Okay, now let's go over to here and let's slide all the way up, free up some disk space. I gotta fix my computer. These are all my trades that I'm currently doing this year so far. I show you every single, now I get 6 accounts. I share 3 of them with you. I think that's more than generous. I'm not showing you the other ones. Okay, the other ones are more complex. I'm sharing a simple, easy one with you guys. Now you come all the way down to the bottom, and what does it say here? Starting date August 31, 2011. Okay, profits from 2012, 2013. These are all clips. 2013. That's 2013 also. What do we have? Whoops. 2021, 2021, 3 years ago. And not only that, but wait, hold on a second. Just hold on a minute. Right here, podcast. Now, there's over 300 videos that I have done on YouTube since 2011. Here is Dividend Stock Talk podcast. Okay, it's on Spotify. There's over 900 episodes. You can pick any one you want. I used to do it every single day. Now that Spotify has changed it and I'm not quite sure how to figure it out, so I stalled it for a little bit, but I'll pick it up again once I figure out how to do it live. But other than that, I've been here for quite a while. Now, I am going to be live every day until the end of the year. At the end of the year, I will reassess the situation because doing 3 hours every night, 7 days a week, kind of takes its toll. Okay, now you got to remember, I do 3 hours every single night, and I do an hour or 2 on weekdays, Monday, Tuesday, Wednesday, Thursday, Friday. I take Saturday and Sunday off days, but I'm still here Saturday and Sunday night. So I've been here for a while. Now, at some point in time, I am going to stop. I don't know when it is, but I've already committed myself to the end of the year. And I like to think I'm a man of my word. I've been here every single night since January 2nd, except for 5 nights. Okay, it used to be 2. 1, I was sick as a dog. 2, I had to take somebody to the emergency room. Didn't get out until like 3 or 4 in the morning. No sense doing it then. And then the last 3 was last week. Hurricane. No water, no electricity, no internet, no cell phone service. Yeah, shit out of luck. That's what they call SOL, shit out of luck. So yeah, to answer your question, I'm going to be here for a while. I hope that answered your question. So we already did Intel. Great, let's move on to something else. Halliburton. Who said Halliburton? Brian. Now, Brian, just to let you know, I do have some Halliburton. Okay, first thing I always want to look at, where's the high of the year? Where's the low of the year? Where was it? Where is it? What direction is it going? It's plain to see. What do we have there? Nice. You like that, Twine? Okay, where's it going? Look, the high of the year was a year ago. Now it's going to the downside. Okay, great. Well, it's currently sitting at 28.33. So the closest strike price to that is going to be the 28.50, and that's going for 33 cents a share. Now, I know 33 cents a share does not sound like a lot of money, but here's the thing. That's 33 cents per share, and you have to do absolutely nothing. The nice thing about it is if I buy it for 28.33 and I sell somebody the rights, not the obligation, they can buy it if they want to. They don't have to. Anytime between when they buy it from me and the expiration. The one I'm looking at now is 25 October. That's next Friday. So if I buy this first thing Monday morning at 28.33, I sell someone the rights through what is called a covered call. It's one of the safest trading strategies there is. So if I'm buying it at 28.33, I sell it to Tom for 28.50. Okay, that's an additional 17 cents that I'm collecting on top of the 33. That's 50 cents I'm walking away with. Now I know 50 cents doesn't sound like a lot, but when you're buying 100 shares, 1,000 shares, 10,000 shares, it adds up quick. And what's going to happen? Well, absolutely nothing. Number one, do I like the stock? Number two, does it make sense? Okay, it's Halliburton. Well, I know who Halliburton is. Remember rule number one, never buy something you don't understand. If I didn't understand who Halliburton was, I wouldn't buy it. But I know who Halliburton is. Okay, it is on my list. It is a company that has been increasing its dividends consistently every single year. Not once in a while, every single year. That's why I buy it. All right, that being said, let's take a look at some more questions. Reese, we don't do long-term investments here. We do weekly calls. Hammer Sophia, thanks for that one. Are you a swing trader? No, I'm an American. I have no idea what that means. What's the deal with Arbor Realty Trust? No idea. Okay. Christoph, I don't buy anything unless it has 20 years of increased dividends or it's on Warren Buffett's list. Cliff, glad you like it. Can you explain a call? 65616993. Okay, whatever. I'll call you Peter. Peter, a call. Basically, there's two kinds of options: a call option or a put option. I'm not going to cover put options because they get a little complicated. A call option is simple. Okay? You're giving the right, not the obligation, to someone to buy a stock from you at a certain price by a certain date. It's like a contract. Actually, it is a contract. And to have a contract, you have to have 4 items available. Number 1 is consideration. Money has to change hands. That's where the option price comes in. 2 is a beginning date. 3 is an ending date. And 4 is a meeting of the minds. It means you both are agreeing on something. Okay, so if I buy it here at 28.33, I sell it to you at 28.50. The understanding would be that you have the right, not the obligation, to buy it from me at any time between when you pay me the money and the expiration date. Okay? So, agreed upon price, agreed upon time frame. Okay? So, I'm buying it at 28.33. I'm selling it to you at 28.50. You're paying me 33 cents per share. So one contract is $33. Okay? 2 contracts, $66. 3 contracts, $99, so on and so forth. Okay? So a call option is the right, not the obligation, to buy a stock at a certain price by a certain date. QDTE, West Coast, that's a no. Okay, you're new here, so I'm going to cut you some slack. Let's pull it up. QDTE. Look at that. It's a no. The reason it's a no, if you see this here, October, November, December, March, June, those are all months. That means it is a monthly optionable stock. Now, monthly optionable stocks means I can only trade it once per month. Now, I didn't go to college, I admit that freely. Okay? But I do know that there are 52 weeks in a year and there's only 12 months in a year. So if I'm going to get a check from someone, I would rather get 52 checks than just 12. I don't do monthlies. The numbers just don't work for me. Okay, it's simple as that. Now, 20 years of increased dividends means the company's profitable. Weekly options means I can trade it every single week. Every single week, 1% per week, that's 50% per year. With a monthly, I can't get that. So let's take a look at the next monthly out. The 42, we'll be looking at the 43. The 43, not even going, it says 0. What the hell does that mean? I can't even give you an example. Sorry. Well, even if I could, look, at 43, 30 cents a share. That's not even 1%. Not even 1%, and I got to hold it for 4 weeks. Okay, that's even worse. I don't like monthlies, the numbers just don't work. Do you only sell stocks you want to own in case you get assigned? I don't want to own anything. S, do you hear that? I don't want to own anything. I want to borrow it for a while. That's like, here's an interesting thing. Okay, people ask me all the time, so James, you're making all this money. Why don't you have a Lambo? Why don't you have this? Why don't you have that? What the hell am I going to do with one of those things? I'm a handyman. I grew up dirt-ass poor. I like to get my hands dirty. I like putting the lawnmower in the back. I like putting rakes, shovels, bags of cement, 2x4s, plywood. No, I need a pickup truck or a van. So I drive a van and I also have a pickup truck. So what the hell would I do with a luxury car? Hell no. Okay? No, well, why don't you just pay someone to do that? No. I actually like getting my hands dirty. I like to build something, stand back and look at it and say, I did that. No. I'm not a check writer, okay? Because there's two people in this world, check writers and people that actually do things. I'm not a check writer. Poseidon's last molar, how are you today? So S, I hope that makes sense. I don't want to own anything. I will buy the stock, hold on to it. Not that one. Let's look at something good. Okay? I will buy the stock. I will sell somebody the rights to buy it from me for the exact same price I paid for it. I will collect a nice premium. Ooh, Dennis wants to take a look at Dell. I love Dell. Okay? I want to buy it at this price. Sell it to someone at the exact same price. Look, it's $126.92. Well, great. I'll sell it to someone for $127. Collect $2 per share. And I still get all my money back. Pay the bills. That's right. Okay? So I'm buying it $126.62. I'm selling it at $127. So what am I collecting? I'm collecting 8 cents. Big deal. Profit's profit no matter which way you look at it. Look at it this way. Nobody ever went broke taking profits. Okay? Now, if I buy it here, I sell it through a covered call. Now, a covered call, there's hundreds, literally hundreds of videos available on YouTube or Facebook or wherever you want to look at videos that will explain to you exactly what a covered call is. You buy a stock, you sell it to someone else for the same price, and you collect a premium. Well, the premium is $2 on a $127 stock. Well, that's over 1.5%. Well, 1.5% every single week, that's over 75-80% per year. I can live very comfortably on 75-80% per year of my nest egg. Okay, I don't do anything long term. I don't do capital appreciation. I don't buy low and wait for it to go higher. No, I do cash flow on a weekly basis. That's it. I have no desire whatsoever to buy something and watch it go up. Nope. If that's what you're looking for, you're in the wrong place. I don't do crypto. I don't do Forex. I don't do futures. I don't do, what are those stupid new things nowadays? Smart contract? Nope, I don't do that either. Okay? I'm 60 years old. I'm past the point of taking risks. If you're a risk taker and you want capital appreciation, you want your account to go from here to here overnight, yeah, this ain't it. Sorry, this is slow, methodical, tedious, and boring as hell. But I will take boring as hell 10 minutes a day. That's only less than an hour a week. An hour a week to make 50% per year. Now, if you have $10,000, $20,000, it may not be worth it to you. But when you have 100, 200, 300,000, 1% of that, okay, 1% of 300,000, well, that's $150,000 a year at 1 hour a week. Oh, hell yeah, I'm doing that. But it's not really for the young guys, very small amounts. Jay Clark, you're new here. So you're just selling the stock and collecting the premium. You don't just sell calls and puts that are way out of the money, so you could keep the stock and still collect premiums. Yeah, no, Jay, terribly sorry. At the money is the highest rate of return. Okay, right now 126.92. The 126 is 251. All right, well I'm losing 92 cents right off the top. Okay, so you take 92 cents off of that, then I'm down to what, 140 something? Or I can do the 127s and collect 202. Well, that's the higher rate of return. Do I really want to hold on to the stock? No, I don't. I have 300 companies that consistently increase their dividends every single year for over 2 decades. You got the dividend kings, the dividend aristocrats, the dividend champions, the dividend contenders, and then I like to throw in Warren Buffett's list because I appreciate Warren. Yeah, so no, sorry, Jay, I don't want to hold on to anything. Okay? I hope that's understandable. Poseidon's Last Molar, how are you doing? Peace, James. Could Exxon Mobile a buy with the EX date coming up? All right, Peace. We already looked at Exxon Mobile earlier. Okay, so I start at 9 o'clock. Okay, and it's 10 minutes to 10. So I've already looked at Exxon Mobil. Jay Clark, thanks, appreciate it. Peace out, brother. You're welcome. James, could Exxon, okay, I already did that one. Cold Mac, I put 10 grand into Nike. Well, cool beans. Let's take a look at Nike. Uh-oh. Where did it go? QDTE's a no. Down. All right, right there. Cold Mac put 10K into Nike. What about Sony? Hell no. And you take a look at Sony. Hold on a second. Look at this. Okay, can you see this? Let me zoom in here. Look at this. Gap down, gap up, gap down, gap up, gap down, gap down, gap up, gap down, gap up. Hell no. No. I don't like it. It's all choppy. When you get choppy, and look at 1822, the 1820 go for 25. Okay, maybe. No, if you take 22 cents off of that, hell no, it ain't worth it. Well, wait a minute. Maybe. Sorry, I don't like Sony. Sorry. No, before I say no, hold on a second. Let's take a look at Yahoo Finance. And we'll put Sony in to take a look at how well they actually pay dividends. Okay, I go to historical data. Now, you guys can use whatever financial website you want. All right, I'm going to reboot after I take a look at this thing because 50 is a little bit sad. Take a look at dividends only. One dividend. Sony has paid one dividend. Yeah, hell no. Okay, guys, don't go anywhere. We're going to reboot because, 52, it's Friday night. Let's try this. And now... And let's reboot. They're trying to cancel the... Let's try it one more time. One more time. If we try. One more time for... Come on. There we go. And over that way. There we go. All right, so we're going to reboot. And while that's one updating, see what you guys over here. Leanne Cassidy, hi honey, how are you? I'm rebooting the other videos. So I have like 7 cameras going on at one time. Instagram, Facebook, TikTok. No, wait a minute. Which one's this one? I'm getting old. I forget things. Excuse me. Twitter, TikTok, YouTube, TikTok, and then YouTube again. Okay, it's nice to see you again, Miss Leanne. Thank you kindly for stopping by. Okay, so we're getting ready to reboot. Cool beans. No, I don't like Sony. Sony is just, no. Sorry. And what one was next? Oh, I forgot what was next. Does somebody want to remind me what we're looking at next? Because I forgot which one it was. Jimmy, Geronimo, Bubba, Bruce, Birdie. Birdie Better Tea. Birdie Better Tea. You ever see Bye Bye Birdie? That was a cool movie. Jose Bermudez, JB Skull, David, Kyle, Envy, Jill Ann, how are you? Rich Bruner, is the Mrs. Bruner in? We're looking at Dell. Thanks, Dell. Thanks, Dennis. Dell, I love Dell. Okay, now, I'm a child of the 70s, 80s, and 90s. I know who Dell is. I know what they do. Dell is on my list. Why would you not want Dell? Okay, plain simple. Let's take a look. A year ago, we're down here in the 60s, jumps up to 80, 180. That's a 200 or 300% increase. Wait a minute, 60 to 120, 20, that's a 200% increase. Freaking awesome. Drops down, back up. Now we're at 126.46. The closest strike price we're looking at the 127. And that's $2. Well, $2 is over 1%. If I can get 1% every single week, that's over 50% per year. Why the hell not? All right, so let's go take a look. A year ago, 67, tops off at 178. We're currently, now the reason why I like the last 30 days, here's the reason why. Because the last 30 days gives me a good indication on where it's going to be by next Friday by looking at trends. Well, at the moment, it was at 116 30 days ago. She went up a little bit, down, up, down, up, down, up, down. Well, she's coming down at the moment, so not quite feeling it. All right, well, let's take a look at seasonality. What does this stock normally do this time of year? Now, what do I mean by this time of year? Well, look at that. That's beautiful. From January 1st all the way to December 31st. It's a nice, smooth trending to the upside. Now, that's 10 years worth of movement. So if you're going to buy something, buy it in January, get rid of it in December. Here's a nice one. Look. Nice trend line to the upside all year long. Now, that's an average of a 10-year movement. Well, if you know when a stock is going to move, why the hell not buy it and pick a strategy that's going to be better than just a stock appreciation? All right, anyway, enough of me badgering. Let's go back to where we were. Okay, so if we like it at 126, and I want to sell the 127, so let's take a look at what it looks like. If I change it over to covered stock, I get rid of the chart because we already decided we like the 127s. Here's the 127 right here. I was trying to get my leg wrapped around you. Okay, so I'm looking at the 127 right here. So if I buy it at 127, she goes clickety click right there. Okay, it fills right there. I'm going to do just 100 shares because a lot of people get scared when I look at 1,000. All right, so there's 100. Change it to market order. There we go. Here we go. And here's what it sounds like. You ready? Buy one covered Dell. It's a covered call. 25 October 24th. That's next Friday. That means the option expires next Friday. So if the stock is above 127 next Friday, well, I get all my money back and I still get to keep that 2%. Okay, the 127 call against Dell, the market open. Here's my profit right here. $219 per contract. So one contract is $219. 10 contracts is $2,100. All right, so calculator. Here we go. Calculator. Let's clear this. Okay, profit, maximum profit right there, $219. Now remember, Brad got a question. I caught Walgreens on the way up Monday, and it was a hit for me. Brad, awesome. Glad you liked it. Glad it worked out for you. All right, so I'm going to take the profit, $219. $219. I'm going to divide it by what it cost me for this trade. Well, 100 shares of Dell is going to cost me $12,481. Okay, divided by 12,481. That gives me a grand total of 1.75. So that's 1 3/4%. That's well over the mark that I'm looking for. I'm looking for a safe, predictable 1%. But this trade right here is 1.75. Okay, great. Well, what does that come to at the end of the year? Well, multiply it out. It's 52 weeks in a year. If you can get 1.75, that's 91% for the year. That's a nice freaking return. Who else gets 91% rate of return? Now, I say I average 1%. So let's take a quick look for those of you that are new here. Okay, here's my, remember I told you I got accounts that I share with you guys. Okay, so week 39, which was the 13th week of the third quarter. That was the end of July. Look at this one, 2.3%, 3.6, 1.8, 3.6, 3.6, 8.1, 2.8, 3.1, 2.8, 3.3. I'm doing rather well this year, but I usually average 1% a week. 1% a week is over 50% per year. But the thing is, when I say it's a simple, safe strategy, I created it for my 9-year-old daughter, and I showed you her video.
Hi, I'm Tracy, and you being part of my internet website called Thingy, which my dad doesn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that'll help you get the best return on your money.
20 days in February. There's only 21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Because every single day there's a different company paying out dividends.
I always laugh when I watch that video. Okay. She was 11 at the time. So I first showed her, she was 10. She was 9. So 3 years later, we're doing YouTube videos. Because the first couple of years, there wasn't any YouTube videos. What's the tax on these contracts? SR 718766. Now, I hate to be the bearer of bad news. I really do. Because, I like people in general, for the most part. Most people I meet are kind and friendly. I usually meet one crappy person a week. Okay? Is what it is. You're asking about taxes. Okay? Well, taxes, here you go. My advice on taxes: consult a tax strategist or a tax planner. Not a CPA, not a bookkeeper, a tax strategist. They are going to tell you how to set up your account in a way where you do not have to pay taxes. If you did not know, federal income taxes is completely voluntary. There's actually a $50,000 prize if anyone can actually come up with the law that requires you to pay federal income taxes. Look it up. Look it up. Go to Google. $50,000 prize to find tax law. Okay, nobody's found it yet. All right, anyway, let's move on. I don't like talking about taxes because it's just weird. All right, next on the list, we looked at Kohl's Pepsi. Somebody wanted to take a look at Pepsi. Who wanted to take a look at Pepsi? P-E-P. Whoops. Take a look at Pepsi, the number 2 soft drink. High, a low. Where was it? Where is it? What's the direction? Look at that direction. Slightly to the upside. Gotta love it. 175.24. The 175s are going for 133. Yeah, no. Sorry, I like Pepsi, but the numbers just don't look good. Okay? SR 718766. I try to get to everyone's questions. It might take me a while depending on how many questions there are. How does RTX? Ooh, RTX. Isn't that Raytheon? RTX? No, it's just Raytheon. Okay, it looks interesting, but it's going to be a no. And the reason it's going to be a no, don't get me wrong, it is a dividend king, which means they have increased more than 5 decades their dividends. But it's at the high of the year. That's the time to sell, not the time to buy. Okay, it's not a profit until you sell it. So if you're buying it and it's at a high of the year, well, why the hell not take your profits? I don't buy at the high. However, I will look at it in 2 weeks when she starts having profit taking and starts coming back down again, because nothing goes up consistently. Raytheon, Pratt Whitney, Collins Aerospace. Okay. So I'm going to write RTX for us to look at in 2 weeks. RTX. Alrighty, next on the list will be NEP. Now somebody said something about the 24s on NEP. So let's take a look at the NEP. Nextera. Alright, Nextera. Nextera, here we go. High, low. Where was it? Where is it? What's the direction? Up, sideways, up, down, sideways. Interesting. All right, well, let's take a gander. 26, 22. The 26s are going for 80. That's a nice premium. The 27s are going for 35. That's pretty good too. So you take the 22 cents off of this 80 and you're walking away with, what is that? 40, wait a minute, 60, 58. That's still 2%. That's a nice 2% trade. Well, let's actually take a good look at the number. Mark wants to look at HTRC. Mark, I could tell you no now, but we can take a look at it, and I can tell you no then. Let's finish up with NEP first. Okay. A year ago was the bottom of the year, 21.73. The high of the year apparently was in May 21st, and that was 35.08. She drops down. Here's the bottom right here, August 12th at 23.68. Well, the last 30 days, oh, that's too far. 30 days, 30 days, 30 days, right there. 30 days ago, okay, we opened up at 25.40, hit a triple top. Look at the triple top. 1, 2, 3 at 28.26. Comes down, hits the bottom last Friday. And from last Friday, 1, 2, 3, 4, 5 days to the upside. Cool beans. An awesome time to jump in. Because look where it is as compared to the 30-day high. So you have all this space to go up here. So let's actually do a trade on NEP. So you get rid of this. I'm going to like the 26s. Okay, we're going to change this to covered stock. Now, as I said earlier, this screen here is live on YouTube. It is being recorded. Everything I've ever done since the beginning of the year is recorded live on YouTube. So you can go to YouTube at the, what do you call it? What platform are you using? Jay, this is Think or Swim. You can go to thinkorswim.com, download it for free, but you have to call Charles Schwab, let them know. All right, where was I? 26s. Oh, so as I was saying, this is live on YouTube and it's being recorded. So if you like the episode, you can always go back, watch it, rewind it, go back, rewind it, go back, rewind it, go back. I'm in a loop, right? Anyway, so you can watch it over and over again, rewind it, go slower, so you can absorb what's actually going on. All right, so I said I like the 26s. The 26s right here. Let's do just 100 shares. Change that to market. What does it look like? Buy one covered NEP. 25 October 24. That is next Friday. That means the option is going to expire next Friday. So whoever buys it from me has between when they part with their cash and give it to me, okay, and the expiration date, 4 o'clock on Friday afternoon of the 25th of October, because that's the one I'm selling. So if the stock is above 26 come Friday, well, right now she's at 26.22. It's already above 26. Okay, so whatever they buy it for, here's what I'm making: $68.50 off of one contract. Get the calculator out. 68.50. 68.50. What is it costing me? It's costing me $25.32. That gives me a grand total of 2.7%. 2.7%, that's over 100% per year amortized over the year. If you can get 2% every single week, that's over 100% per year. So I like good quality dividend stocks. Is NEP a good quality dividend stock? Well, that's a question you need to ask yourself. Do I like this company? Do I want to own this company? Because you just might have to. Longest I've ever held on to anything was 9 months. And that was Kimberly-Clark. I didn't do it because I wanted to. But in the 9 months that I owned Kimberly-Clark, I collected 3 dividends and over 30 premiums. 30. Can imagine the dividend is whatever it is, and the premiums are usually higher than the dividends. So I made out very nicely with it, even though when I bought it, it dropped, went sideways, came back up, and then I sold it. Okay? Remember the rule. Rule number 1, never buy something you don't want to hold on to. Never sell at a loss. Make sure the company's consistently profitable. Make sure the company has weekly options. And then make sure the numbers work. So who do we have over here? Andy Panda, the barber. Andy Panda, the barber. How are you doing, Andy Panda? All right, so I like this one. Let's keep on keeping on. All right, let's get out of that. Let's get out of this. Let's get out of that. Okay, so we're moving right along. IP, International Paper. Okay, wait. Mark wants to look at HTRC. Now, Mark, I told you I can tell you no earlier, or I can pull it up and tell you no and give you the reasons why I'm saying no. So let's do it. HTRC. Let's try it again. HTRC. Hunter Creek Mining. No options, and not even 10 cents. What the hell are you thinking, dude? Seriously, this is pure speculation. Okay, you're looking for speculation stocks. This ain't the place, dude. This is safe, predictable, consistent 1% per week with companies that have 20 years of a proven track record of being profitable. This one, yeah, no. Dennis. So when it dropped, I guess it didn't even get called out. Kimberly Clark. No, it didn't. All right, so that's a no. KC Bruin wants to take a look at that International Paper. International Paper, cool. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Nice. Nice, it's nice movement. Okay, so where is it now? 47.19. The closest one's going to be the 47. That's going for 50 cents. Now, this is going to be a no, and here's the reason why. Look closely. If I'm buying it at 47.19 and I sell it to someone else at 47, because that's the closest strike price. I always want to do the closest because that's where the highest rate of return is going to be. I'm losing 19 cents. So the 19 cents is going to come from somewhere. So you take that 19 cents and you take it out of the 50. Well, now I'm at 41. No, I'm at 31. So 31 cents on a $47 stock, that's not 1%. Now, don't get me wrong. I like International Paper. I have bought International Paper many times. Because you're going to find the longer you do this, some weeks it has a great return. Some weeks don't. Why that is, I honestly could not tell you. Okay, they have what's called the Black-Scholes pricing method for stock options. It's a huge mathematical equation that gives you an idea of how they come up with these prices. Well, whatever they use to come up with this price, it's going to be a no for me this week. And don't get me wrong, I do like International Paper. It's not even worth looking at the chart because it's going to be a no. Sorry. Are 401ks a scam? Yes, they are. Ooh, I thought I was done. I thought I was done. Twisted Philly, back again. Cool beans. Are you doing this just to find new stocks to invest in? Nope. How does NTR look? Brad, hold on a second. NTR, I'll write that one down while I answer this question. NTR. Right, Twisted Philly. Okay, now you've been here for a while. Okay, you've come often. And I told you the stocks that I'm looking at as what you, the audience, gives me to take a look at. Now this is this week. These are all the stocks you have me taking a look at this week. Okay, now look at this book. Okay. That's last week, week before, week before, week before, week before, week before, week before, going all the way back to January. Okay, so I'm old school. Seriously, old school. I write shit down. I don't trust computers. I don't, which is kind of weird because here I am talking to you on a computer. Weird, ain't it? But anyway, I write shit down. So I'm not looking for new stocks to invest in. I have my list. I like the Dividend Kings. Okay, 54 companies that have increased for 50 consecutive years. Dividend Aristocrats, 67 companies that have increased their dividends for 25 years. The Dividend Champions, 150 companies that have consistently increased their dividends for 25 years. And then you have the Dividend Contenders, 300 companies have increased their dividends for 10 years to 24 years consecutively. Other than that, I honestly could care less about all other 9,414, whatever there is. Will it become harder over time to find 1% profits as trade? No. Okay, balanced trader, Coca-Cola, no. No, don't get me wrong. Coca-Cola's been in business for over 140 years, but the premiums are horrible. I'll show you. KO Coca-Cola. Okay? $70. So we're looking at the 71, 67 cents. I don't think I've ever bought, wait a minute, I bought Coca-Cola once or twice. But the premiums really aren't that great. You might be able to get 1% out of that. But very rarely can I get 1% from Coca-Cola. Okay, Coca-Cola, Johnson & Johnson, some of the really big, huge corporations that have been around for centuries. Yeah, they're a little stingy with their premiums. But anyway, let's take a look at Coca-Cola. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at the way it's going up. High was there, pulled back. Now she's going back up again. Good opportunity. What do I think about SPYL? No. Okay, so a year ago we're at the bottom of the year, and that's 53.65. Average dividend 0.05. Balanced trader. Oh boy, I needed someone to take a look at. SPYI. SPYI. Alrighty, balanced trader. I'm going to pick on you next. Seriously. Okay, I've looked at SPYI many a times, and I'm going to tell you exactly why I don't like it. I'm going to show you the numbers, and you're going to say, what the hell was I thinking? Okay, but sit tight. I will get to it. Coca-Cola. So, there's the low. Here's the high. High was 73.59 30 days ago, right there. So what does it look like to you? Okay, 30 days ago was at 72. She hit 72.75 is the high. She drops, get the profit taken, get a double bottom here, just below 69. Jay Clark, hold that second there, Jay Clark. Here's the bottom right here, 69. She shoots back up. Now she's pulling back down. So a little iffy. What does Coca-Cola usually do? Now, Coca-Cola's been around for a couple hundred years. Okay, what does she usually do this time of year? Now, you really can't mistake this for anything else. Take a look. See, Coca-Cola is going to go up for the rest of the year based on history. Is it guaranteed? No, it's not guaranteed. It just shows you that 10 years in a row it has gone up in the fourth quarter. Well, we're currently in the fourth quarter. So Coca-Cola might be a good trade. So at $70.43, the 70 is going for 121. We're losing 43 cents right off the top. So we're walking away with somewhere around 80 something. So let's do the 70s and see what the 70s look like for Coca-Cola. Okay, Jay, hold tight. I'm not ignoring your question. Just I want to finish up with Coca-Cola first. Okay, let's get out of there. Let's go to covered stock. The 70s. There we go. The 70s. Let's do just 100 shares. At the market, there we go. All right, here it looks like. Buy one covered call of Coca-Cola, 25 October 24, that's next Friday. So anytime between Monday and Friday afternoon, whoever's buying this has an opportunity to buy it from me at $70. Well, it's currently at $70.43. I'm walking away with $80 per share. Per contract. So $80 per contract. Clear this, $80. What is it costing me? $6,920. It's only 1.15%. Well, it still fits 1.15, and I'm sure you know who Coca-Cola is. So here's the question. Do I like Coca-Cola? Do I like it at this price? Am I willing to hold on to it for however long I need to in order for me to make my profit? Okay, now, the largest shareholder of Coca-Cola is Warren Buffett. If it's good enough for Warren, it should be good enough for you. It should be good enough for me. But just to let you know, very rarely do I buy Coca-Cola because most of the time, Coca-Cola's premiums really aren't that great. All right. All right, okay, so Jay Clark, do you like stocks with good dividends because they offer better premiums? Jay Clark, the dividend has nothing to do with it. Here's specifically what I'm looking for when it comes to dividends. Consistency of increased dividends. Now, the reason being consistency of increased dividends, because a dividend is a portion of the profits that the corporation makes. So the corporation can't increase the dividends to the shareholders unless they're profitable. So if they're profitable year after year after year after year after year consistently, okay, they're going to increase their dividends. It's just logic. Balanced trader. I mostly day trade, but I find fundamental investing. Thanks for Coca-Cola. Okay, not a problem. All right, where was I? So hopefully that answers the question. Consistency of increases. Now there's 9,714 stocks to look at. Hey, more power to you. I found the 300 that I like to look at. Okay, I don't look at 300 every week because I take the 300 and I put it into the calendar, and it's based on when they pay their dividends. So you look at John Deere, Fifth Third Bank, Mandalese, U.S. Bank, Cardinal Health, Comcast, Cisco, American Express, Bristol Myers Squibb, J.P. Morgan. That's just the first week of the quarter. Then you get the second week of the quarter, the third week of the quarter. There's 13 weeks in the quarter. So average about 10 stocks per week. Well, if there's 13 weeks, average of 10 stocks per week, I should be able to find 1 or 2 stocks every week. And if I don't, I always go to my fallbacks. What are my fallbacks? My fallbacks are companies like Ford, General Motors, AIG, Bank of America. And the reason that is because the book value is higher than the stock price. Okay, I stay away from stocks like NVIDIA. NVIDIA is a $130 stock. Well, the book value is $2. The dividend on NVIDIA is 1 penny. Hell no. Okay, worst case scenario, NVIDIA goes down. What are you collecting? You're collecting 1 penny every 90 days. Yeah, no, thank you. Where are we? Okay, let's keep on going. International paper, no. What if no one buys a contract? New York, interesting. Interesting you should ask that. Hold 1 second. Brad, is it rare for a call to get exercised before expiration date? Nope, not at all. Because you got to remember who is buying these options. Because there's buyers and there's sellers. That's it, buyers and sellers. You're either a buyer or you're a seller. Now, the thing is with options, 80% of all options expire worthless. So ask yourself the question, you want to be on the 80% side or do you want to be on the 30% side or the 20% side? Math wasn't quite right there for a second. But think about it. If 80% of all options expire worthless, wouldn't it make sense to be a seller, not a buyer? Now, buyers get more money, but the percentages are all wrong. Okay, I do not want to be on the 20% side. I want to be on the 80% side. So when you're buying and selling, you can only buy and sell to one person. I cannot sell you anything. You cannot sell me anything. You've got to sell it to the market maker. That's what his job is. Think about it this way. The market maker is your corner store owner. You know, Quick Stop, 7-Eleven, Quick Mart, whatever, Circle K. Whatever store you have around, everybody has a corner store. No matter how far it's away, it could be walking distance, it could be a couple miles away. The corner store, the closest store. The market maker is the owner of the store. Okay? He will buy a gallon of milk for $3.50 and he'll sell it to you for $4. What he makes is the difference between the purchase price, what he buys it for, and what he sells it to you for. That's his profit. The market maker, here's his profit right here. The bid, the ask. The bid is $70.35. The ask is $70.43. 15 million shares traded. Okay? The difference between the two is what the market maker makes. Now, after hours, these numbers are skewed because it's not quite like that during hours. What is the difference between volume and open interest? Well, open interest is how many contracts are out there. Volume is just how many 15 million shares were bought and sold. Okay? But if you look at Let's change this to open interest right here. Okay? Open interest and volume. Open interest is how many shares accumulated throughout the whole week. Okay? Volume is only 750. Oh, here we go, right here. 752 contracts just today. Okay? But combined all together, it's 2,100 contracts so far this week. And that's for next week. Okay? The $70 call strike, 2,100 contracts. Okay? Look at the 72, 2,400 contracts. The 73, 1,000 contracts. Well, look at on the put side. There's 2,200 contracts on the 70s. What's the open interest? Well, only 247. Well, how many did today? How many's all together, all week long? Interesting, thanks. Ricky, Walgreens baby killed for us 1050 wheels. I have no idea what that means. Really, that is just weird from all different directions. Red Shirt Company, how are you doing? You were skipped on YouTube, so I went to Instagram, and you're backwards. Sorry about that, dude. Now, the reason why that is because of the cameras. Okay, I got 7 cameras going, and only one camera allows me the feature of reversing, and that's the one on TikTok. Instagram is backwards. Yeah, I get that, but there's no option on the camera for me to flip the image. Where on TikTok, it does have the option to flip the image. So if you go to TikTok, you'll be able to see, everything normal. How long have I been trading? Over 20 years. Okay. Let's keep on going. That was Coca-Cola. Great. What are we looking at next? NTR. What the heck is NTR? NTR. And don't think I forgot about you and SPYI. I am going to pick on you in a few minutes. Hey, 86 is here. Yay! Okay, so New York, what if nobody buys a contract? That's a no-no. See, you have 2 opportunities. Well, you actually have a bunch of opportunities. Ricky, selling puts on wheels. Okay, yeah, I get it. I like the wheel strategy, but I don't teach it here. I only teach one strategy here. I'm a nice guy, but I'm not that nice. Okay? I'm showing you a simple, safe, predictable, consistent strategy to get you 1% a week. That's over 50% a year. This strategy is basically designed for old people like me that are retired and want income. Okay, that's the only strategy I teach here, and it's also for newbies that never traded before in their lives. So it's a simple trading strategy. If you like it, great. Come join the morning trading group if you want something more complex that actually makes more money. But always remember, with more return comes more risk. Here's almost minimal risk. Covered calls, exactly, Rick. Covered calls is one of the safest trading strategies there is. You buy the stock, you sell someone else the rights. Selling calls, yeah, Ricky, you're right. Okay, so we're looking at NTR. Nutrien Ltd. I have no idea what that one is. So let's see how well have they increased their dividends. NTR. Now, the reason why I want to see how they increase their dividends is I want to know how well the company performs on a consistent basis. And I'm going to say no to this company. The reason why I'm saying no to this company is they've only been paying dividends since 2018. Well, 2018 to now is only 6 years. Okay, these guys haven't even made to the 10-year mark. Only 1 out of 1,000 companies will make it to 10 years. This one is only at 8. So that's why I like 20 years of consistent dividends. So now is time to pick on so-and-so who wants to look at SPYI. I said no, and I also said you're going to be extremely disappointed when you actually see the facts and figures about SPYI. You ready? Here we go. Here's Johnny. Number 1, SPYI is a monthly. It's a big fat no. I can only trade it once a month. Okay? Once a month. No. Now ask yourself a question. If you're going to get a check on a consistent basis, would you like it once a month or once a week? Well, let me figure it out for you. Once a month, I'm going to get what? 12 to 24% a year if I'm lucky. Once a week, around 52% per year. I don't know. 52% a year sounds better than 24. But I could be wrong. But wait. It gets worse. And here we go. Here's how it gets worse. Now, you said it pays monthly dividends. You're right, it does. SPYI. Okay? How long has SPYI been paying dividends? Jay Clark, hold on a second. Hold on. What was that question? How much capital do you think you need to get started for this type of strategy to have a really substitute your regular job? I really can't tell you. My grandson started his account with 50 bucks. Granted, he's 4 years old. I oversee it for him. I started out in 2011 with 78,000. I lost a shitload. I made a shitload. But that's got nothing to do with it. How you're going to replace your income is up to you. What you have available to you is up to you. How old are you and when you're going to retire? How much time and effort you want to devote to this is totally up to you. Okay, if you can't figure out 10 or 15 minutes a day to look at your personal finances for your financial future, hey, that's an issue on you. Okay? I've been doing 15, 20 minutes every single day for the last 20 years because my financial future is important to me. I have found that people spend more time planning a barbecue than they do with their personal finances. So that's a question you need to ask. So back to SPYI and why I don't like it. We already figured out one, that is a monthly, which means I can only get covered calls once a month. Okay. Reason number two, this thing's only been paying dividends since 2022. That's only 2 years. If you're okay with putting your money into a company that's only 2 years old, more power to you. But wait, it gets worse. 49 to 47. That's going backwards. That's not increasing. They're not consistently profitable. And that's just the first one. Then it goes 48 to 46. Backwards again. 47, 48, 49, 50, 51, 49. Backwards again. 47. Backwards again. 49, 50, 49. Backwards again. 51, 56, 52, backwards again. More than 50% of the time, they went up, they went down. They went up, they went down. Explain to me how that's consistent. Now, if you're retired and you need a consistent cash flow coming in to pay your bills, because you talk to any retired person, and they will tell you, yes, I get X amount every month. And they plan their life based on how much money they have coming in. Now, if the money's coming in, going up, going down, going up, going down, it's going to be, it's havoc. No, thank you. But wait, it gets worse. Can you believe it that it gets worse? Okay, so we're going to go to the summary. You're putting your money into this, 51 bucks, and you're getting a return of 11.69. Now, 11.69 is really not that bad. But is it? If I'm showing you a simple, safe, predictable, consistent 1% per week, and if my math is correct, 1% per week, that's 52% per year. Wait a minute. Is 52 better than 11.69? I don't know. So no. See, now you probably never seen the information that I'm sharing with you, so you probably don't have a, I don't know if you do or not. If you knew you could do weekly options and get a consistent return on a weekly basis, well, maybe you knew it. Maybe you didn't know it. But now you know it. Now you know there's someone somewhere in the world that makes a safe, predictable, consistent 1% per week, which is over 50% per year. And would you really consider putting your money into SPYI? I need to learn the covered call strategy. Okay? I appreciate that. Thank you. But if you see, the funny thing with the powers that be, you go into a bank, they say, oh, this is what we got for you. You go into a money manager, oh, this is what we got for you. They don't tell you the truth. They tell you what they want to sell you. Okay? Now, oh, Schlumberger. Brad likes SLB. SLB. Yes, I do like Schlumberger. It is on my list. So, as I was saying, when it comes to money, okay, the powers that be expect us to be stupid and just take whatever it is they give us. So, you go to the bank, you deposit, they give you 1%, and they lend it out at 10 or 12%. And they get that profit. And we get the shit end of the stick. Okay? So the reason why I'm doing this is, one, I got kind of fed up with it, and I figured, you know, hey, I'm 60 years old. There's a possibility that everything up here may go with me to the worm feast. You know what I mean? Okay? So I'm doing this to share my knowledge in hopes that my children and my grandchildren will pick it up one day and say, hey, that's what Papa G did. That's my grandson calls me Papa G. I like that name. Because I was waiting. When my son told me he was pregnant, I'm thinking, the only thing I can think of, shit, what's my name going to be? Because you don't get to pick your name. Your grandson or granddaughter picks it for you. All right? All right. Anyway. So SPYI, no. Let's continue. Okay, Ryan, that was SPYI, NEO's S&P 500 High Income ETF. I don't like ETFs. Like, haven't you seen enough Terminator movies? Why would you give your money to a computer? ETF, electronically traded funds. I know it means exchange traded funds, but all exchanges are all electronic, so don't kid yourself. You're giving your money to a freaking computer. And the computer is telling you what you're going to get. Is it going to give you the benefit of the doubt and give you the good shit? No. It's going to give you what you saw, 11.6%. Some people may be okay with 11.6%, and there's nothing wrong with that at all. Absolutely nothing wrong with it. Some people just aren't good with making decisions, and there's nothing wrong with it. Okay, there's an ass for every saddle. All right? If you're good at it, great. If you're not good at it, either get good at it or pass the buck on to someone else. And don't bitch and moan that you're getting 11% and other people are getting 50%. Okay, it's that simple. Okay, you have a conscious decision to make. Do I want to do it myself and go through the time, the effort to learn it? Balanced trader. What if stock really gaps up or down? Have a covered call. Okay, that is going to happen. Trust me, it is. It happened a bunch of times on me. One time I remember distinctly, and I was happy as a clam, is that I bought a stock, and then on Friday, it didn't get called out because the stock was lower than the strike price I sold. Monday comes along, and I'm getting ready to sell another covered call against it because that's what I do on Monday mornings. I do covered calls for the stocks I carry over. And all of a sudden, this sucker gapped up. And I said, oh, hell, I ain't doing shit. And I sold it right there. I took the profits. Forex trading? No. I don't do Forex at all. Sorry. No Forex for me. No crypto. No futures. No smart contracts. None of that stuff. I like tried, true, and consistent. Whatever. No, I don't do that. What was I saying? Wow. Squirrel. I do. I have ADD and I have no problem. I have no problem admitting that. I get lost. Unless people remind me where I'm at, yeah, I get lost. Thanks. You're welcome. Okay, so let's go on to the next one. So you like to sell in the money contracts. Now, Casey Bruin, I prefer in the money because they're a safer trade. Okay, at the money is the higher rate of return, but in the money is a safer trade. And I'm all about safe, predictable, consistent, and no way to lose. I love that idea. And simple, I forgot about that. All right, let's go. We already said no to international paper, even though we did look at it. Where am I? Uh-oh, I missed a bunch of questions. I have to go backwards. Sorry, guys. Okay, 86 is here. 86 is in house. What stock was that? That was SPYI, and that was a big fat no. Ryan, NEP, we looked at that one. IP, we looked at EOG. Ryan, EOG. Wait a minute, I've heard of that once or twice. What the heck is it? EOG. Okay. I don't know if I've ever traded EOG. EOG. Okay. Historical data. How well are they with their dividends? Because the dividends is shortcut to profitability. If they consistently increase their dividends, means they're consistently profitable. I mean, it's just logic, right? Maximum amount. Yeah, this one's going to be a no. I can tell right off the bat. Okay, and here's the reason why. Holy shit. Look at this, all the way down to 1990. But here's why it's a no. Are you ready? Watch this. 1990, 1 penny. 1999, 1 penny. Oh, sorry, 1990, 1 penny. 91, 1. 92, 1. 93, 1. 94, 1. 95, 1. 96, 1. 97, 1. 98, 1. 99, 1. 2000, 1. 2001, 1. 2002, 1. 2003, 1. This company has not freaking popped. Yeah, no. Okay, balanced trader. Strategies. That works. Can I do a covered call right away once I buy the stock? Absolutely. As a matter of fact, that's what I do first thing Monday morning. A covered call. Let me hang tight. We've done a couple already. Just hang tight. We're going to do another one, and I'll show you. When you do a covered call, you buy the stock and sell the option at the exact same time. Because the stock and the option are intertwined together, you already know what your profit's going to be. So you do the math before you hit the send button. If it's 1% or more, great. After we look at the charts, after we look at the numbers, after we look at all the details. So yeah, hang tight. We'll show you another one. So anyway, EOG is going to be a no. The dividends are absolutely horrible. But that's just my opinion. What the hell do I know? Look at this. December 2021, $2. Okay, January down to 75 cents. That's 50, 70. That's a huge discount. Going from $2 a share to 75 cents a share. Hell no. What the hell are you thinking? Ryan. Okay, Ryan, I haven't said it all night. What the hell are you thinking buying this crap? Did you even look at the numbers? Okay, or did someone say, hey, EOG is a great company, you should buy it? Why don't you look at the numbers? I mean, it's your money. You can do whatever you want. But seriously, dude, everything you need to know about a company before you buy it is available online. You can get it anywhere. Yahoo Finance, Google Finance. Hold on. You do covered calls on the same stocks. I have no idea what that means. Yeah, but I do covered calls on the same stocks over and over and over again. Because if you think about it, if you have a winning horse, why not bet on them in every race? I mean, that just makes sense. All right, TOST, what the heck is that? What about the put side? All right, CB Bruron, I don't do the put side here. Here, I teach one strategy only. Balance trade, you got it? Good. Okay? Now, there are hundreds, literally hundreds of different trading strategies there are. And if I went through every single one of them, most people would be confused as hell. And I'd be singing to a very small audience. This strategy here is simple, it's safe, it's predictable, it's consistent. No way to lose if you do it right. Okay, the only way you're going to lose money if you do something wrong, if you hit the wrong button. Allie, Brad wants to take a look at Allie. We actually have some Allie. Okay. Your stock pick is blue chip most. Yeah, why not? Macy's, yep. Ooh, we haven't looked at Macy's today. Macy's is my big winner of the year. Okay, so Robert, toast. Really? T-O-S-T. Why have I never heard of this company? Well, let's find out why. T-O-S-T. Oh, that's why I've never heard of it. There are no dividends like the time period. So let me ask you a question, Robert. Why would you invest in share of their profits. There's nothing wrong with it. Appreciation. They want to buy a stock and watch it grow. You're in the wrong category. You're in the wrong place, dude. Seriously. That's not what I'm looking for. That's not what I'm teaching. I am teaching cash flow for people that are in my situation, that want to make sure that their retirement is safe and they're getting a safe amount of money on a consistent basis. So I'm looking for 1% a week. That's 50% per year. Toast is not going to give it to me. Covered calls looking interesting. I had idea before, but I will dig into it more. Okay, I'm a Class A tard looking at Class C Solar Edge Solar. Okay, I have no idea what that means, dude. Seriously, wrong conversation. So anyway, Robert, yeah, Toast. If that's what you're looking for, seriously, you're in the wrong place. Don't get me wrong. You're welcome here to listen. You give ideas every once in a while, but I really would like you to come up with, stay within the parameters. A company that's consistently profitable. That means dividends consistently increasing for 20 years or more. There are plenty of them out there, okay? And weekly options. This one does have weekly options, great, but it has no dividends. Now, I don't just look for the dividend, I look because the dividend tells me when the stock is going to increase. Because if you go over here, okay, each one of these green dots represents an EX date. Now, an EX date is the last day the stock trades before the dividend is paid. There's 4 dates to remember. Date number 1 is the announcement date. That's when the company says, hey, everybody, we made this much money. This is how much we're paying. The announcement date. They tell you how much they're paying and when. Date number 2 is the EX dividend date. That is the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. If you want to collect the dividend, you got to buy it before the EX date. Date number 4 is the payment date. That's when you get paid. Only 4 dates you need to know. Now, the reason why I like dividend stocks is because dividend stocks go up in value just before the dividend's paid. How much time you spend on a daily basis market? Personally, on my own account, 15 minutes. Okay? Everybody else's account, it comes up to like an hour. Okay? But I get paid well to do other people's accounts. That being said, let's continue. So Toast is going to be a no. Jill Bruner. Wow, how's the old boy today? Let's take a look at CAR. She wants to take a look at CAR. No idea. I don't know why she wants to look at CAR. I've never heard of it. CAR. Avis. Interesting. Jill, nice pick. CAR. All right, Jill, I got a minor problem with Avis. 2004, 2005, 2006, and then everything else disappeared. So, Miss Jill, I'm going to say no to Avis. Sorry. Got to go. Nice chatting with you. Balance Trader. Hope to see you again soon. I'm really good with names, so when I see you again, I will say hi. All right, so Jill, sorry, dear. I'm going to say no to CAR. They had no dividends in 07, 08, 09. Yeah, no. Sorry, kiddo. But you want to look at VST. Really? VST. VST. I'm going to say no to this one also. The reason why, Jill, the dividends go back to 2019. Well, 2019 to 2024, that's only 5 years of dividends. The major obstacle for most companies is the 10-year mark. Okay, this one's been to 10 years because you see they've been paying dividends. The first dividend they paid was in 2016. Okay, well, nothing from 2016 to 2019. But that's not enough. That's not even 10 years. CJ, shout out to 10 Minute Trader Discord group. Great people there. Yeah. Anyway, let's get out of there. All right. Sorry, Jill. You really got to find. Now, AbbVie's a good one. AbbVie's been as a dividend king. They've been around for 100 years. AbbVie. They've been around for 100 years. So let's look at AbbVie. A, B, AbbVie, here we go. 188, the high, the low. Where was it? Where is it? Look at that. Nice upward movement. 190. We're looking at the 190. It's going for one. Yeah, that's going to be a no. Sorry. Don't get me wrong. I like AbbVie. They're dividend king. They've been around for a long time. They've increased their dividends for over 50 years, 5 decades. But look at the numbers. The 190 is only giving $1.29. That's not even 1%. Brian, that's an interesting question. Did I have negotiated to 8%? Now, I've been with Schwab since January because Schwab bought out TD Ameritrade at the end of last year, and they transitioned everyone over. So at the beginning of the year, I was paying 8%. I have no clue what I'm paying now. I really honestly don't care because it's all part of the game. Okay? If my margin is 12, if it's 8%, great. If it's 12%, oh well, what am I going to do? What are some of the best companies that pay weekly dividends? None. There's not a single company that I know of that has a weekly dividend. And Mark, you weren't paying attention to what I was saying. I have weekly options. Not weekly dividends, weekly options. Okay, and there's over 300 companies that have weekly options. So you're selling in the money calls, covered calls, to get 1%. At the money, in the money, out of the money, whatever makes sense. Now, K. Scott, it's always, always, always about the numbers. So at this moment in time, AbbVie, $190.66. At the money at this moment in time is $129. That is not 1%. Now you have some other companies like Dell. Okay, at the money, $126.92. At the money would be $127. That's paying $202. That is more than 1%. So if I go in the money, I do $126, and that's paying $251. But you take away the 92 cents, and it's only making 140, no, 160. But it's still over 1%. I would prefer to go higher in the money and have a less rate of return to have a safer trade, because it's a balance. There's a trade-off. Okay, see? At the money, 127, the stock has to go up 8 cents. But the 126, well, it doesn't have to move at all. It can even go down 92 cents and still be in the money. So it's a trade-off. Okay, and that's part of the beauty of being in the morning trading group. And it's well worth it. It's $100 a month, and you get to be live with 20, 30 other people, and we exchange back and forth, and you look over my shoulder while I'm doing my trade, and then I actually answer all your questions. Okay, so I'm on over an hour every single day, and you get to interact with me. And then you get asked questions, and there's always the Discord group where you guys can talk other strategies behind my back, because that's what they do there, because there's a whole bunch of people there, and they trade ideas, because they're all looking to do the same thing: safe, predictable, consistent returns, with safety and predictability being the highest on the list. What should I invest in right now? Angel, you should invest in yourself, in your education. 86 wants to take a look at ConocoPhillips. Ooh, good company. I like ConocoPhillips. First thing I want to see, high, low. Where was it? Where is it? What's the direction? Down, up, down, sideways. All right, so currently 105.67. The 106s are going for 115, well over 1%. So that all works. Now we jump in and we take a look at the chart. Because just because the numbers are good does it mean it's the right time to buy? Because I've seen really great numbers, but the wrong time to buy. So it always goes hand in hand. The numbers look good. Well, what is the chart telling me? Well, let's take a look. A year ago, ConocoPhillips was at 126.29. It jumped up to the high of the year in the middle of April, and that was 135.33. It's getting late in the day, I can tell because my eyes aren't focusing quite right. Wow. The low was a couple of weeks ago, 9/11. Ooh, the low was 101.30. So the last 30 days right here, okay, she went up, down, up, down. Now she went sideways. She should be going back up again. But we'll see. We'll see come Monday. But what does it normally do? Now, to find out what it normally does, well, we take a look at the last 10 years. How does it look over the last 10 years? Okay, the seasonality chart. Here you go. The blue line is this year. The red line is 10 years worth of data. 2014, 15, 16, 17, 18, 19, so on and so forth. 10 years average move. So look, the fourth quarter, very slight upward slant. So we take the cursor, put on the blue dot, which represents today, left click, drag right. So for the next couple of weeks, this thing's just going to go flat, sideways. Okay, fine. That's great for covered calls and spreads. And other trading strategies too, but those are the only ones that we like to lean on. All right, so that being said, ConocoPhillips. Now, somebody wanted to know or show you how to do a trade. Well, here we go. Now, I like the 106s, so let's get rid of this. Let's jump on over to covered stock and do the 106s. Here it is right here. Now we'll just do 100 shares because you guys get scared when I do 1,000. The market, here we go. Buy one covered call of ConocoPhillips. The option is going to be 25 October 24. That means the option expires and becomes worthless on the 25th of October, which is next Friday. The 106 call option on the ConocoPhillips strike price. My maximum profit is $151 per contract. So I'll get up my calculator. 151 is the profit. What is it costing me? $10,449 for 100 shares. That's 1.4%. 1.4% trade on ConocoPhillips. So it's always back to those same questions over again. Do I like ConocoPhillips? Do I see myself owning ConocoPhillips for the long term? Amy, we already looked at Exxon Mobile. Sorry. Okay, so if you really want to look at Exxon Mobile, you can go back to YouTube and watch the video after we're done. Dun, 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 back there and back here. All right. Look at that. We're 11 o'clock. We got a half hour to go. Why do you care if the company is profitable? Oh my God. Did you really honestly ask me that question? Why do I care if a company is profitable? I'm not investing my company to a company. No. What kind of a question is that? Why would I put my money into a company that's not profitable? What the hell is the point? I'm not giving my money to someone who can't turn a profit. Plain and simple. You can put your money anywhere you want. I'm not going to invest my money into a company that's not profitable. Ain't happening. Terribly sorry. Brian, Coca-Cola has earnings this week. That's why the premium is more, probably. Can you give me some tickers? Yeah, I already did. Which utilities do you like here? All of them. Jill, I literally just told my husband to put it in the list, and we will check it in 2 weeks. Stryker Medical. Okay, dude, you really got to give me the ticker symbol. I have no idea who the hell Stryker is. So usually, if I don't have any idea who it is, it's probably going to be a no. And the reason why is because I look for consistency of profits. I'm not going to put my money into a company that's not profitable. Ain't happening. Okay, give me 3 top dividend stocks. Macy's, Nordstrom's, and Kohl's. SMCI, oh hell no. Lyman, seriously, SMCI? Did you even look at the numbers on SMCI? Let's pick on this dude for a little bit. SMCI. I think he's doing it just to fuck with me. Seriously. Okay, SMCI. It does have weekly options. Great, it's at 47.26. Well, let's check and see how well they pay out their dividends. SMCI. Oh, wait a second. No dividends at all. Why the hell would I invest in a company that has no dividends? Especially when the name of the show is Dividend Investing for Weekly Cash Flow, or Dividend Investing. If it doesn't have dividends, why the hell are we looking at it? Seriously. Okay, let's forget that, dude. All right, what's next? SN. What the heck is SN? Saturday night, that's what it is, SN. Yeah, sorry, kiddo. That is a monthly. And I already said I don't do monthlies. The numbers just ain't there. Okay, there's 12 months in a year. Great. Well, there's 52 weeks in a year. 52 is higher than 12. So why would I want to do 12? If you want to do 12, hey, more power to you. Okay, maybe you have less time available on your hands and you like the idea of doing it once a month. Great. I have no problem whatsoever doing it once a week. So that's what I do. Sergio Coney, hell no. 86, New York. If it's not a quality, profitable company, more than likely your investment goes south. Thank you for that. Morning Group is great. User, I have no idea who the hell is. Hey, Paul, thank you for the Discord link today. Your course is worth it. Thank you. QCOM. Ooh, I like QCOM. It is on my list. See, I like it when guys give me stuff that's on my list. OKE, hell no. That's a no. Sorry. QCOM. Let's look at QCOM because QCOM is on the list. Okay, QCOM a year ago was the bottom, 105.43, topped out in the middle of June at 230. Drops down to a trading range and just goes sideways for the last couple of months. Look at that. Up, down, up, down, up, down, up, down, up, down. I mean, come on, it's predictable. Look at it. Okay, it's going to be in QCOM's going to be a no this week only because it's in a downturn. So let's look at the last 30 days. Okay, last 30 days, up, down, up, down, up, down, up, down. So next week, hypothetically, she should be down here somewhere on the 66, and then she'll turn around and go back up again. That's when I want to jump in. I like QCOM, I do, really. But it's not the right time. Timing is everything. Because why would you buy it when it's in a downtrend? Misty's a no, dude. Sorry, I don't like ETFs. Electronically traded funds. Haven't you seen enough Terminator movies? They have other movies where computers take over and kill everybody. But yet, you want to put your money into a computer. Yeah, no. Sorry. All right, so where are we? Yeah, so QCOM. I'm going to write QCOM down for next week. Not next week, the week after. That's 2 weeks. Okay, I have quite a bit of companies 2 weeks from now. QCOM. All right, I like QCOM. All right. Where is Yahoo Finance? Do you see the length of dividend payments? Jill! All right, Jill, let's go to Yahoo Finance. Okay, here's Yahoo Finance. On the left-hand side, you'll see historical data. You click on historical data, slide down a little bit, and you see right here where it says historical prices. You click on historical prices, and it says dividends only. Okay. Well, I can't use this one because that one doesn't have it, so let's look at another one. Okay, Microsoft. We all who Microsoft is. Okay, dividends only. Here's the dates right here, October 2023 to October 2024. You click on here, and you hit maximum. All right, give it a few minutes to load, and then you slide all the way down. Okay, so Microsoft first started paying dividends in 2003. Okay, that's over 21 years ago. So Microsoft is a yes. But look at the numbers. Okay, 8, 9, 10, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75. Consistently increasing. Okay? Thanks, 86 got that question. Yeah, he answered the question for me. Paul, Raul. Raul wants to take a look at Lowe's. L-O-W. L-O-W. Ooh, look at that run up. That's sweet. Okay, so I like Lowe's. It is a dividend king. They have increased for more than 50 years. Great. Okay, they have been in business for over 100 years. Double great. However, it's going to be a no for this week only because it's at the high of the year. I don't like buying at the high of the year. When it's at the high of the year, that is a time to sell, not a time to buy, in my humble opinion. But if you want to buy it at the high of the year, more power to you. Okay? So Lowe's is a good candidate for 2 weeks from today. L-O-W. Alrighty. Bum, 86 Papa G. Yep, that's my name. Alright. Uh-oh. I missed all these questions. Alright, here we go. I caught up. I got them right here. Sean, what are your thoughts on HTGC as a long-term dividend? Okay, Sean, I don't do anything long-term. Okay, seriously, dude, if you're looking for long-term, you really should be somewhere else. This is strictly short-term cash flow. All right, I mean, I appreciate you here. I love the fact that you want to know questions. I don't do anything long-term. If you want something long-term, there are other websites out there that do long-term stuff. I don't. I do short-term cash flow. That's it. Brian, Dollar General. Let's take a look at that one. I love Dollar General. It is on my list. I bought a whole bunch of it this year. Bought, sold. I don't own any at the moment. A year ago, 117.25. We topped out in the middle of March. Is that right? Yeah, middle of March at 167.48. Look at the big drop down right here. That was 8.29, the end of August. Big drop, going sideways. Okay, so last 30 days. Here you go, last 30 days. This is what it looks like. It looks like you should wait on it. That's what it looks like. 30 days ago, we're at 87. The high of the year is 88. She dropped down and retraced. The bottom is right here. That was Tuesday. Okay, the bottom was on Tuesday. And that was 79.55. Well, she went up, pulled back again. I would wait for a solid bottom and keep an eye on it to make sure it's a good opportunity. So I'm going to write Dollar General for next week. It's already written down for next week. So it's already on the list for next week. Brian, U.S. Steel. Ooh, good company. Over 100 years old. Another dividend king. Alrighty. High, low, where was it? Where is it? What's the direction? Up, down, sideways. Look where it is. A year ago, 34. Right now, 37. What's the point of buying a company and hold it for a whole year? It was 34 last year. Well, right now it's 37. That's only a $4 increase in a year. That's horrible. Okay? Up, down, same place we were a year ago. What's the point? Anyway, I'm not a long-term investor. I'm not. I like cash flow, plain and simple. All right, last 30 days. And believe it or not, I do have some U.S. Steel at the moment because Look what happened on Monday. See, this is Monday right here. Okay? This is what we saw on Monday. Okay, here's the 30-day high here, 30-day bottom. She came up. She ended up Friday here. Okay? Now, I bought it last Monday. Okay? Not this Monday. I bought it last Monday. Made a nice little profit. I carried it over to this week, and I made another profit. Great. I'll get rid of it now because I got my return on it. Oh, so anyway, 37.82. We'd be looking at the 38s. The 38s are going for 60 cents. That's a little bit less than 2%. But here's the thing. U.S. Steel has been around for over 200 years. The high is here. Here's the bottom. Now it's going to the upside. We still have a lot more space to go before Now, it's not guaranteed. Okay? There's no guarantees in the stock market. But it looks like it's going to come back up before she turns around and goes back down again. Because that's all stocks do. They go up and then they go down. They go up and they go down. Because think of it this way. If you're a buyer and you want to make a profit, you want to buy low and you want to sell high. Well, look at here. 34 bucks and then it jumps up to 38. Now that's only a $4 increase, but it's a $34 stock. A $4 increase on a $34 stock is it's a little over like 11 or 12% in 1 week. So if it's up 11% in 2 weeks, why the hell wouldn't you take it? Because that's what I would do. Hell, I'd take it if it's up 3 or 4%, because I'm only looking for a safe, predictable 1% per week. In 2 weeks, it's up 11%. Hell yeah. So it could right now turn around and come back down again, but it's still going up. Don't know. Okay, dude, I don't do crypto at all. And I really don't I really don't care. Because I do know that the high for crypto was in the 70s. And you're excited that it's in the 60s? Well, it's down 10,000 bucks. Why the hell would you be excited about that? That makes no sense to me whatsoever. The high was in the 70s, and now it's in the 60s, and you're excited about that? I don't know what to tell you there, dude. Uh-oh. Okay, we're in Yahoo Finance. We already did that. Because I trade. Well, good for you. Okay? I do remember people. Now, you probably don't know this, okay? But I remember the gold rush in the 1980s. Gold went from $200 I think it was $250 an ounce to $800 an ounce. Okay? Yeah, I appreciate that. Thank you. But listen to this for a second. Okay? So I don't know if you realize this. But gold in the late 70s, early 80s went from $250 an ounce to $850 an ounce. Okay? Now, the people who bought it at the high at $850 an ounce, because it kept going up, and then at the very top, those people who bought at the top had to wait. Are you ready for this? 3 decades, 30 years to break even. Okay? So cryptocurrency hit 70-something a couple of years ago. How long are those people going to wait to break even? The hell with turning a profit. 33 years. See? So you know. Why the hell would I jump into something that's $10,000 below its high? Now, and cryptocurrency is not legal tender. I cannot go to Starbucks and buy a cup of coffee with my Bitcoin. Can't do it. I have to transfer it into something else. And yeah, it's a pain in the ass. No thanks. Until it becomes legal tender and some kind of regulation, I'm not doing it. No, you cannot. I cannot go anywhere and spend cryptocurrency to buy groceries, to put gas in my car. No, I have to change it from crypto into US dollars and then spend the US dollars and then take the US dollars and put it back into crypto. Yeah, no thank you. Until it becomes regulated, until it becomes widely accepted, fine. Until then, no thank you. All right, and I always tell everybody, if somebody emails you or texts you about me asking you about cryptocurrency, I don't do crypto. There's 28 imposters pretending to be me. More than likely, you all are going to get a text or an email or something from someone claiming to be me and then me saying, hey, I got a great deal for you. Yeah, no, it ain't me. So always be leery who it is you're taking advice from. Never blindly listen to someone on YouTube or Facebook or TikTok, whatever. Hey, I'm live. You hear my voice. If you really want to talk to me, DM me with your phone number. I will personally give you a call. You can ask in the chat right now, does James really call? You can ask, and you have a whole bunch of people saying, yes, he does, yes, he does, yes, he does. Leanne Bruner and time frame. I do agree with you, never trust anybody. Well, thank you kindly. I only deal with people I meet face to face, and I tell this to people. Face to face. CJ, yeah. Yes, I do call. Alrighty. I don't really love the taste. For those of you who've been here for a long time, you know it's like a couple of months ago, I'm coughing all the time. But ginger tea with honey, working wonders. Jill Ann Bruner, historical data, yeah, we already got that. Yahoo Finance, yep, we already did that. Lowe's, we already did that. Papa G, yep, we already did that. Already did that. DG, we did that. Pfizer, Brian wants to take a look at Pfizer. Just to let you know, I do own some Pfizer. Pfizer, tra-la-la. Uh-oh, we got 13, it's 9, it's 11:13. Yes, baby, yes, ginger tea with honey and add some lemon, and it's a remedy since centuries. Yep. Yeah, because months ago, I'd keep coughing and coughing and coughing, and now I don't, because I get my ginger tea with lemon. My ginger tea with honey. I don't think add some lemon to it. Why not? All right, so Pfizer. High a year ago, low in May. Where was it? Where is it? What direction? Down, up, sideways. It's currently at 29.24. So the 29.50s is the closest one, and damn, it's only offering 21 cents. That's not 1%. Now, I already do own Pfizer, but it's not a good time for buying new ones. Sean, I've had HTGC for the last 2 years, and it's been great so far. Just curious and continuing to buy. Well, let's take a look at HTGC. HTGC. Yeah. Okay. It's a monthly. It's a no for me. But let's take a look. HGTC. HTGC. I put in the wrong symbol. See, I hit the wrong button. I hit the wrong button all the time. That's why I tell people. Hercules Capital. Okay, here's the dividends. Let's look at all the dividends. Okay, goes back all the way to 2005. All right, so 2005 was 3 cents, then they went to 30 in 06. 07, 30 cents. 08, 34. Then back to 30. Then to 4. Then to 20. Why did they decrease it from 30 to 20? That is a 33% crypto. HTGC is trying to break resistance at the current price. If it breaks above resistance of 20, it will go to the next one, which is 22. Cool, I like that idea. But I haven't gotten there yet because I want to figure out why did it cut its dividends by 33%. Okay, so it cut its dividends by 33%. 20 to 22 to 23, 24, 27, 30, 31. Okay, so it started at 31, 2013, 2014, 31, 2015, 31, 2016, 31, 2017, 31, 2018, 31, 2019, 31. What is that, 5 years of no increase whatsoever? So think of it this way. I'm getting 31 cents a share. I'm retired, okay? In 5 years, they do not increase, which means in 5 years, they are not profitable consistently. So as inflation increases, how the hell am I going to meet my bills if the company is not consistently profitable? Well, let's just continue. 33, 35, 40, then they cut it from 40 to 32. 34, 37, 39, 40, 48, 51. Then they cut it again to 47, 48. Yeah, I'm not 100% happy with the increasing and decreasing. I'm not. Okay, but anyway. And it's a monthly. So I'm not 100% sure what to tell you. But for me, it's a no because I don't like monthlies. I mean, yeah, they're okay, but I honestly don't know anything about them because it's not on my radar. It's not something I look at because I don't like monthlies. Right now, it's at $20.30. Well, the next strike, the $20 is going for 50 cents. The 21 is going for 5 cents. Well, that's a hell no. I lose 30 cents right there, so I'm walking away with 1% for the month. That's 12% for the year. No. For me. I mean, if it works for you, fine. But the numbers just don't work for me. That's why I don't like monthlies. Because if I bought it now at $20.30 and I sold the $20 strike price and I lose 30 cents right off the top, I'm only making 50 cents. You take 30 cents off that, I'm walking away with a 20-cent profit on a $20 stock. Well, that's a hell no. Cryptomania, I believe the monthly time frame is good for the end of the Q3. Well, that's for you. I don't do monthlies because the numbers just don't work in my favor. Why would I want 1% per month when I can get 1% per week? Now, I didn't go to college, I admit that freely, but 1% a month is 12% per year. 1% per week is 52% per year, and that's not even compounded. If you compound, it's over 62%. So here's the question. Would you want to do 12% a year or 62% a year? No, I don't do monthly. It's because the numbers don't work in my favor. Yeah, okay, I didn't even take a look at the monthly resistance. I didn't even take a look at that. I was strictly looking at the numbers on if I was going to do the trade. I didn't even look at the chart because it's a waste of time for me to look at the chart because it's already a no right here. Okay, so I look at the chart first. Where's the high, where's the low, all that kind of stuff. Fine, great. Now I will look at, is it worth me wasting my time on? And it basically was a waste of time because the numbers just don't work. But I appreciate your input. Thank you. So Sean, I can't help you out with that. Brian, Advanced Auto Parts. Cool, B. I like Advanced Auto Parts. I like it when you guys come up with good, decent stocks. Okay, high, low. Where was it? Where is it? What's the direction? Up, down, sideways. It's currently at $39.82. The $40 is going for 92. I like that. That's over 2%. But here's the question. Do I like Advanced Auto Parts? I do. It's on my list. I buy it as often as I can. Now, just because the numbers work, what's the chart telling me? Is it the right time to buy? Can you quickly re-explain dividends? Cryptomania. A dividend is... Let me take a deep breath here. Dividends are a portion. A dividend is the portion of the profits the corporation gives back to its investors. So there's 9,714 different companies in the stock market as of last Monday. There's probably a different amount now. It changes all the time. But last I checked, there was 9,714. Out of all those 9,700 companies, half of them will take all their profits and put it back into the company for capital growth, which makes the stock price go up faster. Fine. There's nothing wrong with it. The other half will take those profits and give it back to the investors. That's you and me. When we buy and sell stocks, we become the investors. And the dividend is a portion of the profits given back to the investors. So if that number increases every single year, it cannot increase unless the profits of the company increase, which means 20 years of increased dividends means the company is consistently profitable for more than 20 years. Those are the only ones I like. So here, AAP, Advanced Auto Parts, is on my list. I do like that company. Lyman, Ford. We'll take a look at Ford. Hold on a second. Actually, we probably won't get to it because it's 11:22. I'm done at 11:30. unless you guys want to like, comment, share, and get the count up to over 200. It's at 82. Actually, it's at 78 now. Ain't no way, you guys. There's a challenge for you. Here's the challenge. Get the count up to over 200. Like, comment, share, all that crap. And I'll get it up over 200, and I'll stay longer. That's my deal. It's always been my deal. At 11:30, if the count's over 200, I'll stay longer. Anyway. Okay, thanks. I am French. That's why. Thanks, man. Merci beaucoup. Bonsoir. Nous allons bien. All right. Advanced Auto Parts. Let's do this. A year ago, 53.48. We topped out in the end of March at 88.45. Now we had a nice drop. Check out the drop from 61 all the way down to 48. That was a big drop. Kept on going. Last 30 days. I love the last 30 days because it gives me a good idea. Ooh, look at this. This looks cool. You ready? 30 days ago, we're at 42. We topped off at 43.50. Dropped all the way down to 36.50. Up, down. Now she's going back up again. Look at this. From here all the way up. So it's definitely in an upward movement. So if I buy it first thing Monday morning, 39.87. The closest strike price is going to be the 40. Let's actually do one real quick so you can see exactly what the numbers look like. All right, so we like the 40, so let's get rid of that. Let's change this to a covered stock. And we want to do the 40s. Here's the 40 right there. I'm going to do 1,000 shares. I'm going to freak you guys out. All right, at the market. Okay, here's what it looks like. Buy 10 covered calls on Advanced Auto Parts. 25 October 24. That means whoever buys it has the opportunity to buy it from me at $40 before Friday, 4 o'clock on the 25th of October. That's what a covered call is. It's like a packy run. I don't know if you guys remember what a packy run. I know Leanne knows what a packy run is. Say, hey, I'm running to the packy. Anybody need something? Great. Pick me up 1,000 shares of Advanced Auto Parts. Great. What is this? Crypto. Sorry to interrupt. But I am buying for this at major support and accumulation point. Thanks for the hint. Okay. Okay, you're welcome. So, as I was saying, what was I saying? See, this old age shit is no fun. If you guys are young, stay young. Don't get old. All right, buy 10 covered AAP, which is Advanced Auto Parts. Expiration date, 25 October 24. The $40 call. Well, currently stock's at $39.87. The break-even point is $38.88. That means anything over $38.88 is going to be a profit. So, the profit on 10 contracts is $1,120. So let's do the math. Let's get out our calculator. Clear this. The profit, $1,120. How much is it costing me to buy 1,000 shares of Advanced Auto Parts? Well, that's $38,886. Grand total of 2.88%. Great. Well, what do you mean you don't have 38,000? Well, let's just do 100 shares. Okay, let's get rid of this, and let's change it to 100 shares. Okay, 100 shares. Well, now I'm only making $112 per contract. Okay, $112 per contract divided by how much is it costing me? Well, it's costing me $3,880. 880. Well, would you look at that? The exact same rate of return, 2.88. So it doesn't matter if you get one contract or 1,000 contracts. The rate of return is the same. And that's what I'm looking for. I don't like it when people say, oh, I made 30,000. Oh, I made 50,000. I don't like that shit. Really, I don't. Okay, if I make 1%, I make 1%. Because it doesn't scare people away. So if you have $1,000, 1% is 1%. If I have $100,000, 1% is 1%. Okay? Okay, Lyman. So your strategy is sell put option. Nope, I have no idea where you got that from. And if it's exercise, you hold. Sorry, Lyman, you're totally wrong. Okay, I don't do put options here. All right, I don't know where you got that idea from. I do covered calls. Now, if you're unfamiliar with covered calls, you can go to YouTube and put it in the search covered call strategy, and then literally hundreds of videos will pop up showing you exactly what a covered call is. You buy a good quality stock, you sell the rights to someone else to buy it from you at a certain price by a certain date. The example I'm giving you is Advanced Auto Parts. The price that I am agreeing to is $40. Well, currently the price of the stock is $39.87. Okay, so if I buy it at $39.87, the contract that I'm entering with whoever buys it, and I really honestly don't care, and I probably will never find out who, because I sell it to the market maker. Okay, you cannot sell to me, I cannot sell to you. I have to sell it to the market maker, you have to buy it from the market maker. Okay, you do not have a choice, unless you actually have the physical stocks in your hand, yeah, you have to buy it from the market maker and you have to sell it back to the market maker. Sean, it does have weekly options, so it doesn't, oh, it doesn't, okay, yeah, thank you. Steve Jones, how about CVS? Actually, you got 1 minute. I don't think I'm going to be able to do CVS in 1 minute, but let's give it a try. CVS. First thing I want to see, high, low, where was it, where is it, what's the direction, up, down, sideways, up, down. Right now it's at 60.45. The 61 is going for 58, nope. The 60 is going for 91. You take 45 cents off of that, it's going to be 45, nope, nope, and nope. Sorry, CVS, the numbers just don't work. Okay? Steve, do you see that? If I'm buying it at 60.45 and I try to sell it to someone else, I have two opportunities. The 60, and I'm losing 45 cents, which I gotta deduct it from here. So I'm only walking away with 44 cents, something like that. No, 46 cents, something like that, which is not 1%. And then if I sell the 61s, well, I'm getting 50 cents, which is not 1%. So that's going to be a no. Sorry. Lyman. All right. I'm buying, okay, Cryptomania. I'm buying Advanced Auto Parts as well starting Monday, first thing. I'm going to do a major support. God damn it. Okay, whatever. Cryptomania. What do you think about the theory and also the status and the fact that the stock market is at a high level as it was before World War I and World War II? Okay, interesting. Now here's the thing. Is the stock market overvalued, or is the value of our dollar less? So you may or may not know that 40% of all the money in existence was created in the last 4 or 5 years. So that means in the last 4 or 5 years, you all, and myself included, have lost 40% of your buying power. So I'll look at it this way. Let's say, hypothetically speaking, you have $100,000 in your account and you have 1% of all the money in the world. Let's say there's $1 billion in the world. And then all of a sudden the government comes in and they print a whole shitload of a whole shitload of money. So now you still have 100,000, but how much money is in existence? Well, 40% of all the currency available at this moment was created in the last 4 or 5 years. So you have lost 40% of the value of your dollar. So that's why I like to buy stocks, because even though the value of my dollar is going down, I'm still able to buy a good, decent company and then get a rate of return that's astronomical, because 50% rate of return on a year, I can double my money every 14 months. Even though the money that I have is worth less than it was 4 or 5 years ago, if I'm continuously doubling it every 15, 16 months, okay, I'm able to have a higher cash flow, even though that cash is worth less and less every year. Okay, so I'm not quite sure if you understand all that, but let's continue. All right. You are being too nice to her. Rich, I'm not. I told her both of the ones that she picked were no. And I didn't want to say anything too bad. You got that, Cryptomania? Okay. But Cryptomania, I agree with you 100%. I love the idea of cryptocurrency. I just want it to be more widely accepted. Okay? And I can't wait for the day where cryptocurrency is widely accepted. Because here's one thing, it really, really, really pissed me off. Okay, I deposited a nice chunk of change into a bank. Okay? Then I transferred it from one bank to the next bank. So here's the thing. From the time I received the order, okay, well, and the time I actually got to use the money was 10 days, which is 2 weeks. Not to argue, but it is you just need to get a good exchange that has the credit cards that you can use crypto with. Yeah, I hear you, okay? But until it becomes a little easier and a little safer and less eyes on what I'm doing, yeah, fine. So as I was saying, with the currency now, and one thing I really like about the idea of crypto is that I deposited money into one bank and I transferred it to another. It took 2 weeks for me to be able to use that money. And then, okay, said your transfer will be 3 to 5 days. 5 days later, it got transferred. Great. It gets to the new bank, and the new bank says, well, your deposit is being held for 5 days. After 5 days, they said, well, we're releasing this amount and we're holding on to this amount for another 5 days. 15 freaking business days later, I got my money. Cryptocurrency is instantaneously. I love it. I just don't like all the negatives that go with it at this moment. So as soon as they smooth out the wrinkles, then I will start looking at it. Okay, Sean, you appreciate me looking at HTGC? Yeah, dude, I'm glad that you're here. I hope you're getting educated. I hope you're seeing what you should be looking at before you invest your money. Now, if you like HTGC, great, more power to you. I moved all my assets into crypto, I get it. I even trade stocks through my crypto account, which is technically my own bank. I can lend money. I can charge interest. Yeah, all that kind of nice, neat, fun stuff. Yeah, I get that. I understand that. I'm still in the working phases to get that. Eventually, I'm hoping by next year I'll have my own bank and I'll have my own fund so I can actually invest money for people and give higher rates of return. Right now, I'm looking at somewhere around 20%. Nobody gives 20%, so anybody who invests in my company will be getting a 20% dividend yield every year. So that's what my goal is, and I'm still working towards that. So, but I do like the idea of cryptocurrency. So we will address that later on. We're past 11:30. Let me finish up with these questions, then we're out of here. Appreciate that. You're welcome. Hey, Bama Redneck, you just getting here, dude? Redneck's in the house. We're about ready to get there. Okay, Scott, ET, ask me tomorrow. Pola, Tesla, no. They don't share dividends. That's a no. QDTE, no. Bambi, too late. Garrett, before regulations are applied. Yeah, okay. We'll have to chat more about that anyway. Any brokers you recommend for futures? I don't do futures, so I couldn't help you out. DVA, nice to see you. Just getting here. Don't be too late before the regulations are applied. Well, the regulations also give me an idea. See, right now, there's no consistency with making weekly cash flow with cryptocurrency other than sitting in front of the damn computer. Yeah, no thank you. Okay, here with stocks, it's consistent, it's predictable, and I'm good at it. See, I don't want to sit in front of the computer, and with cryptocurrency, I would have to sit in front of the computer. No thank you. Okay, so until they offer weekly options on it or monthly options, then I'll take a look at it. Tricky Turtle. Jill, Burner. Yeah, QCOM, we already looked at QCOM. PODD, no. Pola, Tesla, no. Verizon, I like Verizon when I'm looking at it. We already looked at CVS. Where are you just talking about Phillips regarding their refinery closure? No, I wasn't talking about the refinery closure. Phillips, I wasn't talking about Phillips either. Oh, ConocoPhillips, yes I was. PODD, yeah. We're not gonna look at that. Tesla is a no. See above. Verizon, Kohl, Tesla, no. SYK, that's Stryker, isn't it? SYK. Okay, it's gonna have to be tomorrow because we're past 11:30. Roku, not old enough. They don't have 20 years of dividends yet. Do you invest in preferred stock? Yes, I do. NOG. James Ford, check me tomorrow. TSM, Nico, check me tomorrow. Sean, it doesn't have weekly options. It doesn't fit. Nope. Styler Medical. Okay, we'll have to take a look at it tomorrow. Okay, because we're way past my bedtime. We're only at 68. Remember I told you after 11:30, the only time I'm staying on late if you get 200 people here? Nope. Micron. Ooh, I like Micron. Exchange traded funds. Yeah. Okay, failed checkout. That's electronic traded funds. If you think an exchange is not electronic, you're sadly mistaken. Okay, man, thank you very much. See you tomorrow. Don't forget it, you guys. You need to paint your car. That's funny. Actually, I do need to paint my car. Uh-oh. TKO. Uh-oh. Where was I? Where was I? Wow, I missed a lot of questions here. Uh-oh. Bama Redneck is telling someone to go away. As cash flow, what are your thoughts in general on it? Sean, I like a consistent 1% per week. Yeah, send me the model and the year and the paint color. I'll give you an estimate. Yeah. Sorry, dude. Last time I painted my car, it was $45 for a gallon of paint, and I used a roller and a brush. Isn't that weird? Okay. TKO. Never heard of it. Thank you there, 86. Question. If it goes down a little, can covered calls still make money? Yes, it can. Righty. Ford, any good? Yep. Mac, we check with me tomorrow on Ford. I actually have some Ford, yes. Thoughts on TKO? You're going to have to check again tomorrow. DCA, $8 cost average down, yep. Cable, yes. If it goes down below the strike, you just keep the premium, blah, 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 blah. Ginger is very good for your health in general. Yes, it is. And it's good. You know what? For those of you guys who have been watching for a long time, now some of these guys have been here since January. I've been coughing because I have postnasal drip syndrome, and it just hangs right there. It makes me cough. But the ginger is helping out. Madison, ENPH. I can say no to that right now. I have green tea. Yep, me too. Deep TSM, please. Okay, Nico. Back here tomorrow. We'll take a look. In the military, we called it "I'll fly if you buy." I have no idea what that means. Thank you, sir. Very informative. You're welcome to Jonathan. Micron. Okay, Benny, Micron. I actually have some Micron, and it is a yes for Micron. But I can't show you the numbers now because we're past 11:30. I just want to go through the questions. I don't want anyone to think I'm skipping them. IBM, good company. 53 weeks, all time high. Okay, wait a second. But when you buy the stock, what if it goes down? Is that not risky? Okay, Raul, here's the thing. Rule number 1, never buy something you don't understand, you don't want to own. Okay, you don't want to own long term. Basically, that means if you don't want to own it long term, don't buy it. It's that simple. Because stocks only go 2 ways. They go up or they go down. You're going to buy something, it's going to go up. You're also going to buy something and it's going to go down. And if you think that's different, okay, if you think you're an exception and everything you buy is going to go up, no, it ain't going to work. Okay, they only go up and then they go down. They go up and they go down, up and down. That's all they do. Okay, Nico, like I said, catch me tomorrow. IPR, what time tomorrow? Same time, 9 o'clock. I can structure an LLC doing this. Can I structure an LLC? Yes, you can. In fact, either an LLC, I don't know. I would prefer either a trust. I believe you need to buy and sell with smart money, which is a big wheel institutions. You need to find where the institutions are placing their orders. Yeah, no, I don't like institutions. I don't follow institutional buying. I like logic. And I like to have odds and probabilities in my favor along with a little logic. What time tomorrow? 9 p.m. EB, what was that? Uh-oh. ENB, 6.7% dividend, been killing it the last few months. Yeah, big brain, I doubt it. What time? Dab. Hi, this is James from Dividend Stock Talk, brought to you by the 20-minute. Go up. That's it. That's all the questions. Yay! Now, I don't want you guys thinking I'm ignoring your questions. I go through all of them, and I'll try to answer all of them best I can. So that being said, tomorrow's another day, so we will see you all tomorrow. And now, Leanne, it's been a joy seeing you. You know, drop me a number. I'll give you a buzz. I'll even drive down and say hi and take you out for lunch and let you buy. Done here. Okay, good night on Monday. Yep. And now, all right, done over here. You guys have a great night also. Damn it, I didn't shoot any videos.